All right. Hello, everybody. Welcome back to the channel. We are here officially on Palantir's Q3 2024 earnings live. We've got a lot to talk about, folks. We got about 30 minutes left until we get these results, and then we will go forward with the trajectory of Palantir as a company as we get into their Q3 2024 earnings. I'll be having a bunch of guests join me today to break down the numbers, break down the analysis, and kind of see what the company reports, and then go forward with listening to the call, which will be starting at 5 p.m. Eastern Standard Time. So about 90 minutes from now, we will hear from Karp, Sham, the entire team, and see what they have to say about their continued momentum. Now, one thing I want to start off with, and it's becoming kind of a tradition now every time we get into the actual earnings call, which is just a little bit of a reflection on the community before we get into the earnings, which I want to do for the next 2 minutes. And then we'll get into all the numbers. First of all, this is one of the most exciting communities on the planet. It is very, very rare for a community to come together over a common idea. In this case, that idea is Palantir, even if that idea represents a myriad of things, which is actually what makes the idea so unique and ambitious and interesting to people. And so I think it's just really important to remember that that idea has brought over, at this point, I would say millions of people across the world together using these social platforms to discuss every single day our thoughts and ideas on Palantir. It's also hard to not acknowledge the elephant in the room, which is that Palantir is now in the S&P 500. This is their first earnings post S&P 500, and the stock is up more than 100% year to date. It's actually up 70% since their last earnings. And the stock itself has had a phenomenal run. There's a lot of people that have texted me over the past couple of months saying how much, quite frankly, generational money they've been able to create from betting on this company when it was $6, $7, $8, $10. And Wall Street didn't believe, but retail, this community that we've created over the past couple of years, did believe in the stock. So having said that, two things. One, thank you all for joining. Thank you all for being here. Thank you all for being part of this community. And whatever happens to the stock today, to the company today, we will all get through it as a community, whether it goes up, down, left, right, sideways. It's something for the community to analyze, and good communities are able to stay with each other over the long term. And I think in 2021, 2022, we kind of went through the rough patch. In 2024, we got some greener grass to be able to engage with. And so it's been a hell of a journey over the past 4 years. And then finally, I will say the stock is up a lot. And I think it's part of my obligation to at least say stocks don't go up forever. And I am hoping that Palantir has a crazy result and the street's like, you know what, let's get this stock even higher because it's just doing it what it has to do. It's executing. That could happen. The opposite could happen, and we could see it go down even if there's phenomenal numbers. So we'll talk about the numbers, but I think it's important for everyone to recognize, look, stocks had an incredible run, and even if it doesn't go higher today after the bell on numbers that might be really good numbers, but just not enough to live up to the street, then that's okay as long as the long-term thesis is intact, which is important to analyze. And it's what we do analyze every single day. All right, here we go. Palantir Q3 earnings. Time to break it down with some very good friends. First up, we've got Amir. Amir, what's up?
Oh, caught me off guard. Hey, hello everyone.
How are you?
I am.
Go ahead.
You go ahead.
I was just gonna say, I'm gonna bring up Arnie, but Arnie's like looking in his back for something. I don't care, Arnie. We're gonna.
No, it was made on purpose.
Oh, I was like, what are you doing? What are you looking behind you?
Oh,
I got it too. I got the same shirt behind me as well. There you go. Okay, so all three. I was like, what is he doing? Is he looking in his bag? I was like, is he ready? No, you're good.
I expected that you learned to read my mind, bro. I'm disappointed.
That's true. I should know you better. All right, well, let's get started. We got a lot of stuff to deal with as one of the cult leaders comes in and calls us a cult, which we kind of are. At the end of the day, it is what it is. Amir, before we get into the numbers, raw emotions, nervousness, anxiety, what are you feeling going into these earnings?
Well, you guys know me. It's going to be a pretty boring answer. No emotions. I never feel anything going into earnings. I don't care. I haven't even looked at the stock price. But, I have a pretty good feeling that I'll either, I hedged today. I never hedge. So what I did is I went long on a 10x leverage. So
what?
I'm hoping, like, I hedged if I don't get a drop because I want to buy more, right?
Yeah.
So I hedged to the upside by leveraging 10x. So I bought a contract like that. So I'm praying it drops. If it doesn't and just keeps going, then I got my 10x leverage going on in the background.
Wait, hold on.
Have you ever heard hedging to the upside?
So you bought a call option to the upside?
No, it's an instrument that leverages by 10x.
So what's the max downside that could happen on this?
100%. So I can't go
Okay.
negative balance.
So what does the stock need to go for you to make money on this play?
Anything. It's just like a 10-to-1 relationship to the underlying instrument, which is Palantir. So if it goes up 1%, I make 10. If it goes up 10%, I make 100.
But if it goes down 10%, you lose 100%, essentially.
Yeah, I'm out. But that's what I'm hoping for. I want to see that dip. It's been a long time coming. When Palantir was like chilling in the 8s, 10s, I was like, man, I hope it stays here. I just want to accumulate more. And people got so upset. Do you remember that? Like, you had a year and a half to buy shares. I'm like, that's not how it works. Give me 5 years to accumulate shares. What kind of logic is that? So, I have a good feeling. I'm kind of hoping we do that 30%. A lot of it, I think the stock reaction is going to be to that 30%. And so in order, the top 4 most important things are the top line revenue. Second, I think will be the customer count addition. Well, I'm excluding like US commercial, blah, blah. So just top line revenue, commercial count. Then I have free cash flow, and then net dollar retention is what I think will impact the stock price.
Okay. Neil, let me get your comments real quick. And then Arnie, what are your raw thoughts going into earnings?
So me, hello everyone.
Yeah.
Hey Neil.
Hello Amir. I see we are all rocking the Palantir merch today.
We got to get you some
need
merch,
a better camera so we can see that logo.
No, I have my hat. Yeah,
it's the ghost edition.
It's the ghosting. Yeah. So Palantir predictions, 30%. That's what I want to see, right? 30% growth, revenue. Then some guidance raised as well. And I think that would be enough to prevent a crash in the stock. I think might not be enough
much?
to.
But how big of a guidance raise do you want to see? Because the guidance is laughable. Like it's 701 for this quarter, right? It's like I would be willing to bet my investing career on that they're gonna beat that pretty handily, including Wall Street.
I mean full year.
Yeah. So what do you want to see there?
So we're now at full year 2.76, right? Yeah, that's 24% growth year over year. So yeah, if we can get closer to 30%, I'm not saying it's going to be 30% for the full year, but above 26, I would say.
Yeah, I agree. Above 26. I think if this quarter 30%, and I'll go through my numbers in a second, full year 26, that would be really good. Arnie, your raw thoughts going to earnings, and then we'll get into numbers.
Well, we discussed a lot on Palantir Weekly, and we also went into very details. I think the key thing is obviously the growth. Like, as we mentioned, the key things for investors is the thesis keeps holding, meaning that our thesis is Palantir is becoming the operating system for a modern enterprise, deploying AI into literally potentially everywhere. And any sign that this thesis is going in that direction means that the thesis holds and could improve. I personally think we will see a lot of signs, especially in terms of narrative, like the examples that Sham can provide or Karp can provide with real use cases. I think they will bring up again that US insurer that went from spending weeks to the underlying procedures, so the core business for an insurer, to boom, 3 hours. Cases like that make a shock in terms of awareness, and that's what I personally want to see, and that's what also the market wants to see, and also what clients want to see. Then there is the pure market relationship that only focuses on the current growth and the expected growth. Even more importantly, the expected growth for the coming quarters. The guidance is relatively low, so I expect that to be beaten at least by 1-2%. And if we make the inverse calculation of the implied guidance for Q4, given the current guidance, is 23% growth for Q4. So I personally expect we will see a further rise in the guidance. and they left that buffer just to keep surprising. That's my understanding, because I think in 2021, 22, they learned how important it is to manage expectations with the public markets. So I think the management will have a lot of control on the narrative, especially because it is fair to say the stock is expensive. So a lot of weight will be on the confidence that the management is able to share on the future direction of the business.
And they have been fooling the street too. Like, as we mentioned, like the guidance is super low for the quarter, but the Wall Street estimates are like 2 million higher, like 703. I mean, how do they truly not get it at all? Like, how is it so low?
This is why I'm actually excited about this earning. So obviously the stock has run up, and so yeah, the stock is up there. As Arnie said, it's expensive, but there is not going to be a mismatch in communication in terms of what the analysts are expecting and what Palantir is expecting. Palantir said 701. The analysts were like, all right, they'll do 703. I think all of us on this panel are expecting something closer to 720. Here's my personal numbers in terms of what I'm looking at. 726 million in revenue, which would be 30% growth on the top line, which is very, very important psychologically to get that 30% number. 38% adjusted operating margins. That would be up 1% quarter over quarter. Same free cash flow levels, they said, close to $1 billion. 8% customer count growth, which would be 640 customers. 30% U.S. commercial revenue growth. 24% government growth. And then you're looking at buybacks of probably 1 million shares. They bought back 1.2 million shares at $22 last time. And their 7th straight quarter of GAAP profitability. 9 cents is the estimates. I think if we come in at 10 or 12 cents, that'd be amazing. But if we still come in at 9 cents, I don't think that would be bad either. So if we come in with $726 million of revenue, 30% growth, first time in 3 years, we're back to growing at 30%, and the stock falls, that to me is a buy the dip. And that's my next question to you guys. What does the company have to do but the stock to go the opposite direction for you to feel it's exciting to buy the dip? Because if we're back to growing at 30% and we get back to $35, I think the valuation becomes a lot easier to stomach, and the growth starts to be in that reaccelerating stage. So, Arnie, let's start with you. What would Palantir have to report but the stock to go down for you to be excited to buy the dip?
So to be excited, so let's make the inverse question. What would make me not excited to buy the dip?
Yeah,
a slowdown in the growth would not make me excited. On the opposite, if we see further acceleration, but for some weird dynamic, the market doesn't appreciate that changes the perspective. Now, what if the customer count increased dramatically? We were discussing at Palantir Weekly that if we really want to highlight a negative point of the latest quarters, is the client count growth was good, but relatively weak compared with what we could expect. So in the case, we see massive growth in the number of customers, but the revenue growth is still there, but not exciting, I would buy the dip anyways. If the inverse is like a lot of revenue growth, but the number of customers increases or just doesn't increase, I think it would require more understanding, and I would check immediately what is the deal count, because the trade-off is you can get a lot of customers. The ideal is a lot of customers that pay you a lot. But if there are like few customers, but they are all like very, very high-end customers that could potentially pay you billions in future, that is a different topic.
Amir, what would make a buy the dip scenario for you?
I'll answer that in a second, but first I have a question about your projections. Why do you see U.S. commercial slowing down, but overall revenue accelerating? I don't get that.
No, I don't think it's... Last time it was 33%, so I said 30% plus. So
it was a plus. Okay,
Yeah.
never mind. So for me, it's a lot about sales efficiency. I think it's something that people really don't talk about when it comes to Palantir, because growth is one thing, but the properties attached to that growth is what makes Palantir so exciting for me. I mean, we've talked about it on Weekly. The operating expenses are relatively static, but they keep releasing more and more platforms, solving more and more use cases, all while staying capital light. And the go-to-market strategy, really, there's no precedent. So it's all exciting to cover each quarter what they managed to do with that. I'm talking about the bootcamp approach. But something, so the scenario is that the stock price tanks, but what I'm looking for that would excite me in the numbers, then it would be seeing net dollar retention at 118, because that means that they are finally starting to monetize AIP customers, the initial half a year worth of onboards, where the strategy was, we have no pricing strategy, we're just taking the market. If they're really starting to scale those up, and that net dollar retention increases to something like 118, that would really excite me and make me want to buy the stock.
I think what you said about the properties attached to Palantir's growth outside of the growth is such a undervalued point. I mean, like, there's a reason the street's giving it this multiple. It's not just because it's a SaaS company that's growing, but it's because of the uniqueness of how their growth ultimately is deployed. By the way, Manny, thank you for the 20 gifted. Really, really appreciate that. 20 of you guys just got a membership to the channel, so thank you for that, Manny. Really appreciate it. Neil, what would it take for you to want to buy the dip on Palantir?
If it drops on good numbers, I mean, that's the perfect combo for every investors that hold any specific stock. Good quarter, good guidance, good comments. Wall Street might not directly understand it, so it goes down 10%, maybe even more. We've seen that in the past with plenty of other companies. Should be good enough, right? I mean, even if I could see a scenario, right, when revenue is growing 30%, guidance is raised yet again because it has been raised already before. But for some reason, Wall Street is like, okay, sell the event type of event. And that would be a good reason for me. Plus, we can see from for the client, the customers added, the deals added, we can see also if total RPO continues to go up. Billings could be also an indication of what has happened. So yeah, I expect government to continue to accelerate. That has been their message from, I think, the end of 2023.
And we got some big deals for the government this quarter as well. So
yeah, very big deals. I mean, the big deals come from government, right? For now, the big ones. And I expect that to continue as the DoD spends more on software in the future. So yeah, if the stock dips, crashes, whatever, on good results, and Wall Street takes 24 hours to digest those, good opportunity.
Just as a reference on that last one, US government growth the past 3 quarters, all right? So Q4, it was growing at 5% year over year. Then it went to 12, so more than double. And then it doubled again. The past quarter, it go at 24. So for 3 quarters now, it's been doubling. So that DoD spend is really accelerating. So yeah, I hope to, can we reach 30% US government? I mean, if the awarded contracts are any indication during the quarter, I mean, it's not out of the realm of possibilities. But yeah, want to keep an eye out for.
Well, on the government side, don't forget that there is also Israel going on, and Israel is a country that can spend, and it is already proving efficiency, like results on the software it is deploying. So I think even if we don't see like immediate numbers now, some developments could happen in relatively the near future. I like to make polls just to have a sense of what people expect. We need to be aware that there must be a bias in the numbers since my audience, for obvious reasons, is a little bit more skewed toward the positive side. But I find it interesting to see, okay, what people actually expect. And half of people expect Palantir to surprise us for the results, while 27% expect Palantir to disappoint. But regardless, a lot of people were interested in answering the question. But there's another question. What you want to be? Well, what do you want to expect Palantir to do? And I made this other poll asking, okay, but if I could choose a state of the world, what is my dream case? And yes, there are a lot of people that expect Palantir to moon and also want Palantir to moon. But look how many are craving for a crash to buy the dip.
Well, here's the thing. So put in the chat. First of all, I have the poll of dump or pump in the chat, so you guys can answer that. But put in the chat if you've been buying at 40, and not just a couple shares here or there, but if you've been legitimately averaging up from this $40 to $45 range. We've been here for now almost 4 weeks. So I imagine some people are. But I do think a lot of the community just wants a better price, right? And that better price might be at 35, might be at 30, might be at 38. But I would imagine people are excited, if it can get lower than this.
Are you actually buying in the 40s?
I'm not.
Why not?
I think a lot of us aren't, from the people I've talked to that have been in the stock for years. I mean, it's like Tesla investors, right? There weren't a lot of OGs that were buying when it was $400. But they were just waiting a little bit and they got other opportunities. But there's a lot of new people that got introduced to Tesla at $400. And I'm a little worried that if we do tank, some of those new people will be upset. Nonetheless, that's the nature of the markets. You have to be able to deal with that. But if we put up the growth...
How about if you guys didn't have any positions going into like the 40s, would you be willing to buy in the 40s?
Yeah.
Like obviously you aren't now, because most of us already have a built out position like over years of accumulation. But if you were going in like without shares, would you be willing to buy in the 40s?
I think you have to if you're bullish on Palantir, because from my understanding, it's the only software AI play that's public, that's actually using AI as a tailwind. None of the other, they're mentioning AI on their earnings call, but they don't have that as a tailwind. Palantir is very obvious. I mean, AIB bootcamps in and of itself, that is the tailwind. So I feel like 40 would be the start, and then a DCA at 37, 38 would be good. But if you're bullish on it, you can't kind of not have the position, right? Even if it's at a little bit of an elevated level, unless you think 40 is egregious. And I don't think 40 is egregious. As Arnie and Amir, I think you came up with this term. It's expensive, not overvalued, which I agree with. And stocks can be like that for a long time.
Amir, since you asked me a question, I ask you another question. What is the price to free cash flow of FICO?
No idea. I don't look at pricing.
Look at that.
What?
No, this is one of your favorite companies, and you need to have an idea just to have a sense. Now, I'll check for it.
Yeah, but
86.7 in the last 12 months.
How much?
But I need FICO to
86.7.
Okay. So that's exactly the point. So if we think that FICO, and how much does FICO grows?
Like 10%, right? A little bit less than that.
Something like that.
A bit more. It's expected to grow a bit more. 13.
Crazy. The bubble, the FICO bubble, guys.
Okay, what I want to share, for FICO is already a much more mature company. So the primary metric that people will look at that is price to earnings. And the price to earnings of FICO is something very high, in the 70s. Okay, wow. It is obviously deserved because it is literally a money printing machine, but it keeps growing, but it is not in the position where it can grow like exponentially. And as a reference, Palantir is in that position where the growth is really taking off. So we're comparing a company that grows like 10% with a company that grows 30%. What I want to bring you to the reasoning is, yes, we perceive Palantir as very expensive because when we talk about multiples that are above 50, they are expensive. Like by nature, they are expensive. But if the underlying machine is actually so strong that can deliver a lot of growth, so like 20-30% growth at scale, very sustainably for a long period of time, then that multiple is not really that expensive compared with what you have. And the key thing that I think we can understand better than people just joining the company is exactly what Amir shared. It's not only about the revenue growth, but is how that growth is generated. Yeah. If you're able to generate a lot of growth while keeping the expensive essentially flat, you have a dramatic margin expansion, which means a beautiful thing. The company grows 30%, but what you have on the bottom line, so the free cash flow, actually grows much more than 30%. So if we have like the 30% growth, but the margins keep expanding, and potentially, I don't see real reasons why Palantir margins can't reach like 50% free cash flow margin, given the current structure, then the free cash flow can keep growing much more than 30%, maybe like a 40, 50%. So that's why when we look at like how much is the free cash flow growing year on year, we get a much bigger number than the revenue growth.
I just need to defend my boy FICO here. The thing with FICO is that Palantir, they can't double their earnings per share without doing anything year over year. FICO can do that. They can just double their pricing for the offerings year over year and then double it again, and people won't even notice. That's why people love FICO. But I have to say, I'm not buying FICO either unless it tanks by like 80%. So bad example.
So here's what our friend Dan Ives had to say. We got about 4 minutes left, guys. Dan Ives says, with AI spending expected to ramp up significantly with IT budgets in 2025, we believe the messy of AI Palantir is in a prime spot to continue expanding its pipeline deal flow with more use cases coming forward on the AI revolution. Street focus on tonight on the earnings call. One thing I think we have to acknowledge about Dan Ives is he's been the only analyst outside of Mariana that really understood the use case story of Palantir. And we all thought he was a little crazy for saying $45, and we got there. Any thoughts on just this idea that use cases are expanding, therefore the street will keep giving it a premium?
Look, the powerful thing about Dan Ives is that he, like, you can make fun of his equity research report like it's full of errors, but he actually talks to clients. Like, he extensively calls up people. He learns everything about what they're gonna be doing, what offerings they are looking at, what solutions. Like, he actually talks to people, and that's why I think he was able to be so early. So if he's saying that IT budgets are starting to ramp up and they have a focus on AI, then I would be inclined to believe him, because he's one of the people on the street that actually does the homework.
This is an earnings that's before the election as well. So, you know, tomorrow is going to be a big day, whatever the numbers that come out today, that it's a market moving event, obviously the election. So I think now we got 3 minutes left. It's kind of just one of those things where we're all expecting decent growth, maybe not NVIDIA level growth, but decent growth. If we get NVIDIA level growth, maybe we say hi to the 50s. And if we get growth that's good, but growth that's not great, even growth that could be incredible, but just not enough, we could say hello to the 30s again. And then you have the election coming up, which just puts it into a whole different whirlwind of what could happen. So it's going to be a hell of a week coming up.
I do want to add something on what was mentioned before with the pricing. Is it expensive or not? I think a lot of people are looking at it when it was $100 billion, right? How can this be a $100 billion company while only generating $2.76 billion for fiscal 2024, right? But then if you go and watch Amir's videos when he does the full model, and you can also go and see what analysts are expecting for free cash flow. Free cash flow is expected to grow 26.4% fiscal 24, then 20.6% fiscal 2025, but then 54.5% in fiscal 2026. And if you then, if you go and look at Amir's video or you read his articles, you can see that the growth is coming way, way later, right? For Palantir. So right now, as he explained very well in his videos and in articles, doesn't matter what happens this year, next year, because the majority of its growth, the majority of this value is terminal for Palantir. So of course, it looks extremely expensive right now. A $90+ billion company not even generating $3 billion in revenue makes absolutely no sense. But then if you look and you model out for the next 10 years or so, then you're reaching numbers and you're like, actually high 30s doesn't look so crazy anymore.
Essentially, you're saying they will grow into the valuation, essentially, right?
Essentially.
That's what all of us are expecting from such an explosive company with such amazing leadership, that they will be able to grow and keep expanding what the current valuation is. All right, folks, here we go. Monday, November 4th. It is 4 p.m. Once again, we are back for Palantir's Q3 2024 earnings. The stock market is now closed.
So unless you have Robinhood 24 hours, or you win or we die together.
Yeah. All right, so now we just look at this chart and we just have the anxiety boil up. And
it's going up. It's going up.
It's going up. It's going down.
Up.
We have the website.
Can you fix the scale, man? What is this? Fix the scale.
Yeah, let me fix the scale. All right. So
Here we go. Look, way more dramatic and nice.
So we have I have their website pulled up. Usually it takes 5 minutes. We usually get the results before the deck, so it'll take a bit.
Don't
we
get
get it.
baited like last time. You remember,
No,
like
RC in the chat said he's
people
not
kept
gonna.
posting fake.
Dude, last time someone
I'm-
said they did like 750 million in revenue. We were expecting 600 out, and like my heart, it was a fake tweet.
I'm waiting for RC's tweet.
No, RC said he wouldn't do it, so that's good. That's good.
Do it.
Oh boy, oh boy.
Guys,
This
be
is what it means
careful. Our life is on the line.
Yeah, but this is what it means to be an investor, right? To take risks with your capital. It means to go through this anxiety and this nervousness. And
I've been to calisthenics, the calisthenics course before, and I realized that it is so true that when you suffer together, you get bonded more. And I feel this community really felt that way. Like the people felt like that we are so connected, so close as friends, is because we were there when the situation was awful, but we had a common goal.
Someone said the numbers are out. We have a number in the chat. I don't know if this is the true number. Someone says 738 million. If that's true, then that's amazing, but I don't know if that's accurate yet. So we have to wait and see.
When I see it on the site, that's when.
Stocks flat right now. It's up a little bit. It's up 0.5%. 738 would be what? Over? That'd be like 32%.
That is a 30%. And
that'd be above 30%. That'd be amazing.
Great.
But
You know what makes me think a lot is how much is Databricks growth? Do you remember?
62%, I think.
Okay. Why shouldn't Palantir grow at least like Databricks? That's a key question that I'm trying to ask myself. It's like, I personally don't see any reason why, maybe not the next quarter, but in the coming quarters, why we could see something wild like that. It's down, it's down.
That person said it was a joke, so that's okay. Please don't
Is it-
joke, guys. Don't
is it
play
a
with
joke?
our emotions
Down.
here. Not today, dude. Every other day you can do whatever you want, but this one, please. Someone's saying $1 billion in revenue. Oh my god, dude, that'd be fun. 708 million. All right, so no one has the numbers. Absolutely, no one has them. And
I
now
might go quiet when the numbers are out just to populate the Excel so everyone can see the charts.
Yeah, no one has the
Make
numbers
it
yet.
worse
No
for you
one
guys.
has.
Well, Enrique made me notice that Sham was wearing violet, and Sham in violet is typically a good
Bullish.
sign.
That is-
Sham
that
was
is-
very bullish with his comments just before the earnings. So Sham, please be good.
Do you think we
Alright.
get more than 2 analysts on the call this time, or are
No,
we
I
just
think-
sticking
I
with
mean, no,
the-
look, that's crazy. They're in the S&P 500 now. It has to be setting some sort of record, like dating back to like the 50s or something. Like you only have 2 analysts on the call in the S&P 500. It's crazy.
Yeah, it is what it is. It is what I mean. I guess that's how they do it. But
Come on, Carl.
I can't trust any of the comments in the chat, guys. I'm sorry, I just can't. Like, it's just you guys have ruined it for yourself. You cried wolf too many times, and now we're waiting. So someone says 770. I don't think that's true. I need the exact numbers. Yeah, people on Twitter are just
Yeah.
posting whatever they want.
Yeah.
It can't be 694. They guided 7. Jay Schwartz says I'm also hearing 7. If it's 770, oh boy. If it's 770.
Look,
Hold on.
okay, if
see,
you
I
guys
can't
are hearing
know.
that and the chart isn't moving, then it's not like
Like,
that's
until the
also
chart
true.
is moving,
That's
cannot
also
people
true.
will know before you. Trust me.
Yeah, that's fair. That is very
Virtu
fair.
knows.
Yeah. And
We got
that
Matt, who's
is
joining
my
just in
point.
time. Mr. Matt Money.
Are we printing or what?
We're waiting. I think we got a minute left to see. We are waiting.
Sorry, I had an impromptu call.
That's okay. No worries. Thank you for being here.
No, excited. I wouldn't miss it for the world.
While we're waiting, your thoughts, Matt. What do you think?
I'm biasing myself because I want to buy more shares. So, but I would be very surprised if I heard somebody say 770.
Hello.
What is it?
Stop.
What is it? Up. We're up. We're up. 5%. 5%. All right. We got that green candle.
Okay.
That whoever has the numbers, let us know. 5%. We are green. We are now up 7%.
Oh wow.
7%. I don't have the numbers, so if you guys have it, let me know. I'm just looking at the candle. 6.9%, 44.24, 7% now. It looks like the candle's holding the green. 8%, 44.85. We are holding the green so far. Is it 770?
The candle is moving faster than Amit can
Candle's moving-
scroll.
45,
It's
45.
called like an
8.3.
auctioneer or something. Auctioneer.
Do I hear
still waiting for
46?
numbers. Does anyone have these numbers? Do you guys have it? I
Does
think
anyone
you
have
guys
a
do.
Bloomberg terminal?
I think Matt is the only one that can afford one.
Yeah,
Come on, Matt. Take one for the team and
Amir, why don't you build an entire Bloomberg?
Yeah, why don't you build one? Yeah.
So
I'm
Amit,
waiting for Chad to give me AIP and
Go-
I'll build an alternative.
go look at stock market news. He
He has
tweeted
it.
out.
Evan has it.
Yeah.
Is this one?
726.
That's exactly.
726.
I think that's exactly 30%, which is
Yeah,
incredible.
It's exactly 30.
I called it on the freaking dot, folks. I get to claim victory on this one. I called it on the dot.
I think we all did it during weekly, right?
Okay,
Like
hey,
we had
Amir,
the consensus.
can I take? No, I'm just kidding. Yeah, pretty much all of us on the weekly said, "Hey, we think it'll be close to 30%." Look at that.
But I'm surprised we're up. I mean, I thought that with a 30%, people would be like, retracing a little
Well,
bit.
to be fair, we're up to levels we were at a couple days ago, right?
True.
So it's like I guess
Look,
the street.
I
Yeah,
don't
here we
think
go.
it's
Here are the
much.
results. So we're gonna get the numbers real quick. There's our boy Iliano, of course, 726. Folks, we are now growing as a company in the public global markets at 30 freaking percent. And we
I
beat
wanna
by
see it,
EPS
though.
by 1 cent. There you go.
Oh, Palantir bubble popped.
Okay, so as I'm getting the numbers, let's get raw reactions. Arnie, raw thoughts, 30% growth. What do you think?
Look, 30% growth is great, but I think the reason why the market is excited is not like the 30% per se. Is wait a second, this stuff is accelerating, and every quarter accelerates. How much can it accelerate?
Correct.
And so
Correct.
far, there are no real reasons, as we were speaking just before, why we should not think of the growth accelerating further from here. Databricks is growing 60%, and the size is not that different. There is a very strong market traction that is becoming clearer and clearer. So good luck with imagination.
Okay, does anyone have the deck at all or the press release? Because I don't have anything, and I really need the deck. Okay, so I have something right here. I have one slide. Let me pull this up right here. Folks, we're up 11 freaking percent. For Q4, they expect 767 to 771. Q4 last year, let me get the number real quick. Q4 last year, that was Q4 2023. The company did we can get the exact number, 6
I thought it was 568, no?
568 for Q4. I don't think.
558, yeah.
Commercial revenue 457. I don't know why they don't put this number at the top, because I can calculate the growth rate real quick, but I think they're guiding for 26% in Q4 for full year 20.
I think 27.
Oh,
Okay.
Q4. Sorry.
Yeah, I'm good for Q4.
6.7, yeah.
So that's
And
771 million would be
26%.
26% growth in Q4, which is great. Right now they just did 30%. We're raising our revenue guidance to 2.8 to 2.809 if someone can come up with the growth rate on that. But I think nearly
6.25.
The insane number is
26.
we expect adjusted income from operations of like 300 million. That is 39%.
Wow, I said 38%, so they got 39%. That's incredible. That is amazing. Okay, so
Q4 revenue beat the expectations as well. Analysts were expecting 744 for Q4. So
Well, that's why we're
on
up.
that.
that's why we're up. That's why we're up right now. Yeah.
Where's the... Come on, Palantir, update the site.
No, I think I got it. Wait,
Wait, you got it? It's not up in the news.
No, it's on their Twitter. So I'm pulling it up right here. All right, here we go. Let's get into these numbers, folks. We're at 47. Are we at 40? Where's the stock real quick? Let's see. Wow, 13% up, folks. $46.92. We just touched 47. That is a new all-time high. Definitely a 52-week high for Palantir. Up about 13% on some pretty incredible guidance, along with 30% revenue growth. So let me go through the numbers and then we'll dive deep into them. 30% year-over-year growth. That just looks so beautiful. 30% year-over-year growth. U.S. revenue growth of 44%. GAAP EPS of 6 cents. Raises full-year guidance on revenue. U.S. commercial revenue, adjusted free cash flow, adjusted operating income above consensus estimates on AI demand that won't slow down. That is the exact quote they're getting, seems like, from the company. It looks like Karp was not lying on CNBC when he was saying that there is serious demand for this company. All right. So Karp says, we absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down. This is a US-driven AI revolution that has taken full hold. The world will be divided into AI haves and have-nots. At Palantir, we plan to power the winners. Hell of a statement. Q4 highlights. Revenue grew 44% year over year to US revenue at $499 million. US commercial revenue 54% year over year growth to $179 million. US government revenue growth at 40% year over year to $320 million. Revenue growth in general, 30% year over year. No one can say Palantir is not growing anymore. 30% revenue growth. Just an absolutely phenomenal job by the team. $726 million. They closed 104 deals over $1 million. Last quarter, that was 96 deals. Customer count
was
was
63.
Oh, that was 63. Okay, so that they.
Oh wait, over 1 million, so not 1 to 5. They mean total. Okay,
yeah, so that was 96.
90, okay, sorry.
So still 96. A good beat. Customer count grew 39% year over year and 6% quarter over quarter. Okay, so this is actually declining. Quarter over quarter growth. 39% is good, but 6% quarter over quarter, that means they're closing in on like 620 customers. GAAP net income of 144 million. I thought they would do 150, 144, kind of the same range, 20% margin. GAAP income from operations, 113. Adjusted income from operations of 276 million, 38% margin. That was 13% or 17% 5 quarters ago. So that is more than doubled, which is amazing. Rule of 40, now it's 68. Last quarter was 64. Now it's 68. That's pretty freaking good. GAAP's EPS at 6 cents. Adjusted EPS grew 43% year over year to 10 cents. Cash equivalents, 4.6 billion. Bro, last quarter that was 4 billion. So they added an extra 600 million there now just sitting in treasuries. Cash from operations, 420 million, representing a 58% margin. Adjusted free cash flow, 435 million, representing a 60% margin, and over $1 billion on a TTM basis. For Q4 2024, 767 to 771, raising revenue guidance to about 27% at 2.8 billion, raising U.S. commercial revenue guidance to 50% growth at 687, adjusted income from operations 1.05 to 1.058 billion, free cash flow in excess of $1 billion. This number, folks, was 800 million to $1 billion last quarter. They are saying it will be in excess of 1 billion for full year 2024, and we continue to expect to be GAAP profitable in each quarter of this year. We got the Karp letter. I'll read that in a second, but let's get some raw thoughts. Arnie, what are you thinking?
You know, that advertising with George Clooney. Palantir. What else?
I mean, we're at $47, folks. It looks like the street freaking likes this a lot. And again, this goes back to, it could be expensive, but it could justify the expensiveness by just growing into what the numbers that they're putting up. Matt, your raw thoughts on these numbers? You are muted, sir.
Absolutely unbelievable. Absolutely unbelievable. I'm still kind of in awe. I mean, the whole past 2 to 3 months. I mean, you think about it. Beginning of October, we ran through the 40s, and now we're on our way towards the 50s. I'm trying to gather my thoughts. Interesting.
Okay, well, I'll give you guys some more time to gather your thoughts. Unless, Amir, you want to say something, I'll read the letter, or you can say something.
How much was the adjusted free cash flow? 426.
435.
Yeah,
435. That is over 60% free cash flow margin. That's the highest they've ever done. That is insane.
It is crazy, because I mean, last quarter was 149. Now we're like,
that is insane. Like, do you remember during the week? I was like, how the hell are they gonna, like, they did 300 for the full half year. Like, the first half of 2024, they did 300 in total, and now they just eclipsed that by 435. Like, what? That's insane.
I mean, regardless of what happens to the stock tomorrow, these numbers are making the people that have been bullish on this company for a very long time not seem like idiots. Because it's real, guys. To the 7,000 people that are watching right now, thank you for being here. It's fucking real. it's real. This is not a joke. This is a real company that has real leadership, that has real technology, that actually gives a shit about their customers and wants to give them value before they want to suck dollars out of them. This is a company that believes in building a better world and doing it their way, not anyone else's way. And the market's acquiescing to them. They did a DPO. The market acquiesced to them. They said, we're going to do boot camps, not hire a sales force. The market acquiesced to them. And sometimes when you're authentic enough, the market ends up believing in you. And it looks like the market is believing in Palantir right here, up 12% on the day.
Hot Germs. Hot Jeremy in the chat.
Jeremy, thank you for the $50 super chat. $50 super chat to represent us heading to $50 a share. I love it. Thank you, Jeremy. Also, thank you to Edwards for the gifted 20. Thank you for the 20 gifted memberships, Edward. Appreciate you guys. How are you guys feeling in the chat? Put one word in the chat to describe your emotions right now. Put one word, and let's see what people say. I think
I'm getting roasted in my chat. They're like, you said it was going to go down. I'm like, yeah.
Well, but this speaks to the intellectualism of the community. We are not an AMC GameStop community. We're going to the moon. We are a community that says, hey, we can look at valuations, we can be objective, and we can protect our emotions because the stock's up 150%. We know that there could be some downside. And the fact that we have that level of intellect to be able to come to those common assumptions, I think is what makes this community so smart enough to even invest in Palantir in the first place.
I think what you said at the beginning of the stream, where you mentioned, look, guys, we need to be aware that there is a real risk here, but we are embracing the risk because of these reasons. But please be aware, because here we are not here just to see the positive side. And I think that is exactly our strength as a community. We have been, yes, very confident on the things that could have happened, but we were also very critical on the things that were not happening when bad stuff was there.
Correct. I agree. And I think that it really speaks to the strength of this entire community that has just some of the smartest people in the world trying to figure out, how we can continue to meaningfully invest in this company. We got the CNBC update. Let me bring that up real quick. Let's see what they have to say, and then we will dive deep into the numbers. I don't have the letter yet, guys. It's out, but I don't have it officially, so I'll try to pull that up, and then I'll read what Carp has
I want the deck. Where's the deck?
Yeah, the deck should be coming out in 5 minutes, I think. All right, here we go.
Forecasting Q4 revenue of $767 to $771 million. That's higher than analyst estimates. Adjusted free cash flow in excess of $1 billion for the full year. 2024 U.S. commercial revenue raised upwards of $687 million. That represents a growth rate of at least 50%. So for the quarter specifically, this is a U.S. story. U.S. government up 40% year over year to $320 million. U.S. commercial revenue up 54% year over year to $179 million. 104 deals over $1 million closed in the quarter. Customer count up 39% year over year. All, I might add, with almost no marketing or sales team. I spoke with CEO and co-founder Alex Karp. He says the results show that the value in AI is in the management of large language models as opposed to the creation of them. That, quote, the winners in AI will be powered by Palantir and the losers will read analysts. Quote, this is
hold on.
That is.
It's inedible, bro.
I love Alex Karp. There's nothing else you could say. Wow. I think we're going to get some good energy on this. We are about to get one of the most fun earning calls we have ever had in the history of Palantir.
Century, and we intend to take the entire market. So I asked how Palantir plans to do that. Karp pointing to the defense side, a shift to software-driven with hardware-dominated military environment. The case in point, Maven, which is deployed in the Middle East. On the commercial side, saying any vertical with complex operations is where they're seeing adoption. Hospitals, manufacturing, logistics, to name a few. Karp saying, quote, what I want you to tell people is we need to invest even more in the government space and in industry and implementing AI that is actually changing our enterprise, because this is how we make America even stronger, and there is no real alternative to us. He says it could be called almost U.S. AI, that, quote, our bias on this is so differentiated from the market, although apparently people in Silicon Valley are starting to understand this, but it's just giving a structural advantage to America first and our allies second. You can see this on the battlefield. You see it in U.S. industry. The inverse of this, you see it in the sluggishness, lack of perception, and general malaise in continental Europe. But it's a tale of two worlds, the AI-driven world and the AI-rejecting world. So if you take a look at shares of Palantir, they're popping right now. They're up 11%. The bar was high here. The stock's up over 140% this year. It's up more than 580% from late 2022.
And a lot of people in this community bought this sucker in late 2022. And a lot of people are up that similar 300 to 500%.
Lows of $6 a share. And Adam, I'm going to go back to you on this one because this has been a retail.
All right, so we'll go back to that. But one thing she said that I think was really important, which is that the bar was set high. Looks like Palantir jumped over the bar. Amir, what are you thinking here?
I can't get over like how she's just pausing, trying to read this carp notes to her, like Malay. She's like, "Did I pronounce that right?" Like she has no idea. I'm so glad I bought the hedge. Do you remember the hedge I talked about in the beginning?
Yes.
Man, that is insane. But I haven't really analyzed anything. I need the deck. I need to put like here it is. It's out.
You got the deck. Can you
No,
send it?
not just the 8K. But I can start putting in these numbers. So I'll go silent for a while and make some charts for you guys.
So it's a pain, bro. Oh yeah, the 8K though. Yeah.
Matt, are you connected to the right mic?
Maybe not. I don't know. Let me see.
Yeah, I think you got to connect to the good mic.
I am. Yeah.
Okay.
I think my head was turned. That's probably
Okay.
why.
Perfect. Let's go to Neil. Let's get some thoughts from Neil. Neil, what is your reaction to these numbers?
I mean, pretty good, no? Pretty good. As Frank Sinatra said, I did it my way. Palantir is doing it its own way. They're growing, like we keep saying, they are one of the players and one of the companies that are benefiting from AI without needing to spend tens of billions, hundreds of billions of dollars to build the infrastructure and not even monetize it or try to convince clients that their products are working because XYZ, even though they sold products to those specific clients 5-10 years ago and they told them the same thing. These products will solve your problems, and yet the problems are still there. And so, yeah, the clients are coming to Palantir because apparently that's the only name that actually fixes stuff and actually has AI software that works. So results in the numbers are better than expected. Wall Street is happy. I'm happy. We're all happy. We're going to eat well tonight, tomorrow. I think it's a good day.
I'm getting some more chicken nuggets from Wendy's tonight. I'm not just getting the six pack. I'm getting the 12 pack nuggets. But look, so $47 right now on Palantir, up 13%. I think what's really exciting about this is this quote. I can't get the letter yet. It's not on the website, but this one quote from the letter, which is, this is a US-driven AI revolution that has taken full hold. The world will be divided between AI haves and have-nots. At Palantir, we plan to power the winners. I think when these guys are getting into these sales calls with companies that obviously want an AI operating system and that are sitting down with someone from Palantir, it's either them or some random shitty piece of software that wants money or wants a down payment before they can officially sign the deal. And then you got Palantir saying, we will fly to you. We will do whatever you guys want to do. We will stay with you for as many days as you guys need to feel comfortable in using it. And if you don't like it, then don't pay it. You don't have to pay for us to fly out anything. We're just doing what we can do to hopefully make it easier for you to buy. It is the simplest process of selling. It's like a free trial on steroids because you're actually working with the customer and it makes them feel like you give a shit about them. And I think CARP has had this mentality for the past 20 years that we, because of their work with the government, we will provide value or we don't get paid. And when you put that as your benchmark of you don't pay us until you get an ROI, I mean, how do you lose? It's really hard to lose at that point. Arnie, go ahead.
No, I 100% agree with what you said. I'm a bit shocked by thinking, okay, what else could we expect more from here? Like, everything is playing out.
Yeah, I mean, that's true. The thesis is playing out. For those that I know, a lot of people, Palantir is their first public stock that they've covered or kept up with on a daily basis. It's wild to see the thesis play out. Matt, your thoughts on this?
So I just want to get everyone an update. I mean, 46.29. So we are pulling back a little bit, but we have yet to start the earnings call. So I'm hoping we kind of settle here at the 46-ish, but I'm hoping that CARP just says something absolutely insane during the earnings call, and maybe we continue to rally a little bit further. But exciting times. I'm with Amir. I'm still trying to get the earnings deck because I'm not very good about reading numbers like this and that. I like graphics. So
sorry, Amit, in the you could see the website with the press release. Isn't there also the link to the letter?
I checked. I know when you click on
brings
that,
you to the older one.
It brings you to Q2 for some reason.
Okay, I think the interesting sentence, apart from the blast on the analyst, was that sentence like AI is actually changing the enterprise because this is how we make America even stronger.
I got you.
And there is no real alternative to us. One thing is saying that Karp has been saying that for essentially 4 years, but these numbers speak that he's not lying. That's the biggest thing that we know. Like when a company shows like these numbers, like almost 40% free cash flow margin while growing, it means it is getting a monopoly on something big. You don't get to these insane numbers without you have a very, very, very compelling value proposition. Salesforce is considered like the monopoly of the CRM market, doesn't have these numbers.
All right, let's get into the letter, folks. Every quarter, we get to read a letter from the CEO of Palantir because we have a CEO who actually is capable of writing an eloquent and amazing letter. So let's read through it. Let's see what he has to say. And then we'll keep going from there. All right, here we go. From Alex Karp, CEO of Palantir, this is still only the beginning. The growth of our business is accelerating and our financial performance is exceeding expectations as we meet an unwavering demand for the most advanced AI technologies from our US government and commercial customers. The world is in the midst of a US-driven AI revolution that is reshaping industries and economies, and we are at the center of it. Our revenue last quarter reached a record $726 million, representing a 30% increase from the same period last year as we continue to rapidly scale our business. The year-over-year growth rate of our revenue has increased over the past 6 quarters, rising from 13% in Q2 2023 to 30% in Q3 2024. This is an ascent that we have always believed was possible and have worked tremendously hard to achieve. A juggernaut is emerging. This is the software century, and we intend to take the entire market. The unrelenting march of our business has been driven by an early and decades-long investment in the technical infrastructure that is now making the large language models that have reshaped our world useful and valuable to large enterprises. We are also now a member of the S&P 500, a goal that most people thought was fanciful, and many in the market left us, abandoning hope at precisely the wrong time. Our entry into the index, comprised of the most profitable and significant corporate enterprises in the United States and by extension the world, has been made possible by our strength of our business and expanding demand for our software. In Q3 2024, we generated the largest profit in our company's 20-year history, reaching $144 million of net income. And we remain ready for anything that may come. For the first time ever, our adjusted free cash flow surpassed $1 billion on a TTM ending September 30th, 2024, pushing our reserves of cash, cash equivalents, and marketable securities to $4.6 billion, along with the fact that Palantir also has zero debt. The U.S. market remains the core of our business. It is where we have seen institutions respond most rapidly to the promise of AI as companies and governments and agencies race to implement the technical infrastructure that is necessary to unleash the power of language models across their proprietary and most valuable data sets. And the release of our newest platform, AIP, has transformed our business. We reached $499 million in U.S. revenue across both the commercial and government markets in the third quarter, representing an increase of 44% compared to the same period a year earlier. Growth in the U.S. government business is surging as our customers embrace AI. Revenue from this market, which includes defense and intelligence agencies, rose 40% year over year and 15% quarter over quarter to $320 million in the 3-month period ending September 34th. That means government revenue is up 40% in the U.S. markets, which is incredible. Last quarter, that was 24%. So that's a big jump. And our revenue in the U.S. commercial market swelled 54% year over year and 13% quarter over quarter to $179 million in that same period. It is the speed with which institutions in the United States in particular have adopted our platforms and AI capabilities more broadly that has been, and we continue to believe, the driver of our growth. As America once again forges ahead, our allies and partners in Europe are being left behind. Their private and state institutions stand on the sidelines during this pivotal moment in economic history. While the relentless innovation of U.S. companies disrupts and reshapes global industries, Europe must adapt to opportunities and challenges of AI or risk ruin. The commitment to risk-taking and innovation of America's enterprise is unparalleled in the world. We believe the rewards from the embrace of AI in the US will be immense, both in terms of human liberation as well as economic prosperity. American influence in this unique hour comes not just from controlling the supply of AI, but also the ability to strategically deploy the newest technologies across our most prominent corporations and institutions. Our unchallenged ability to channel and guide the demand for integrating AI seamlessly with essential data distribution and decision-making structures is what truly sets us apart. However, the shallow consumerism of the current age risks diminishing our ambition as a culture and civilization. We built this company to arm and defend our most significant institutions, not tinker at the margins, creating idle, decadent diversions. It is because of, not in spite of this ambition, this sense of purpose and this desire to participate in a story larger than ourselves that we have arrived at this moment. Sincerely, Alex Karp, Chief Executive Officer and co-founder of Palantir.
And Karp we trust.
I mean, don't you just want to run through a wall, dude? Like, don't you just, like those letters, dude, the way he puts those arguments together, the way he embeds the numbers along with the sort of philosophical justifications for why Palantir matters. Essentially, this letter is a big FU to everyone who believed they couldn't get into the S&P 500, they couldn't grow 30%, and for the people that think there's actually a competitor to Palantir. Not saying there aren't competitors in the market, but Karp said this 5 quarters ago. He doesn't think they have competition. And a lot of other software companies that are saying AI is the future, they're not growing at 30%, which means maybe they actually don't have competition. Neil, any reaction to that?
You know, my question is now, what do they do with all the cash, right? That cash pile continues to grow and grow and grow. Okay, now they can still make money on that, but buying back shares is an option. Okay, but what else? Do we want them to take a stake in, for example, a company like Anduril? Or, yeah, what would you do with all that cash?
It's a good question. And here's the funny thing. I mean, if they have close to $5 billion in cash and they're growing 30%, just imagine if they take 500 million out of the 5 billion and just literally dedicate it to scaling boot camps. I mean, could this thing get to 60% growth, 70% growth? Could we actually get NVIDIA numbers in a couple of years? I mean, they have the cash. They're only constrained by, as Karp said, talent, not dollars. And if the demand is insatiable, as he's talking about, this is the story. Demand is crazy. You either believe Karp or you don't. But given these numbers, it seems like it makes sense to believe him in terms of how much demand is out there. And then you've got a go-to-market strategy that has no competition. They have a monopoly on boot camps because no other company knows how to actually give a fuck about their customers and meaningfully give a boot camp. Palantir has done 1,500 of them. If you take some of the money out of the cash reserves, take a little bit net interest income from the treasuries and put that into scaling boot camps, you grow the top line higher. I think we're looking at closer to 40, 50% growth into 2025, 2026. At least there's a chance for that to happen. Arnie, any thoughts on this letter?
More about what you were, I was thinking more about what you were saying about how they could deploy the cash. And right now, I think we are still in the consequences of our scale is not really a matter of spending money, it's more a matter of having enough people that can actually run bootcamps and so on. And the fascinating thing is the success Palantir is having almost alone with relatively little support from the big consulting firms, the ecosystem of partners is there, but it's still relatively small. Makes me think that these results would encourage a lot more people actually becoming resellers of the platform. So that would aggravate, make the...
That's a really good point. We just have a bunch of small consulting firms or resellers pitching Foundry, essentially.
I mean, imagine how many resellers of Microsoft, Salesforce, and so on. But when you see something works and something is so wanted that can grow so much, it means that the product works, the people want them. Let's make a business on top of it. Let's become resellers of Palantir licenses. And that could help the business scale very, very, very strongly. But again, that would not require much cash. So what could be the smart use of cash? And what makes me think a little bit is they could increase awareness even further. But if I had the option, I would wait a little bit until getting a customer becomes almost automatic for Palantir. Now it requires still a lot of work with like setting the bootcamp, setting like each client. But imagine if this becomes almost completely all automatized, then you have like only the cache buffer you can spread into spamming advertising everywhere, and you know that the customers can onboard themselves. I think that's the big like option bottom that they are potentially willing to push, but not now yet.
Yeah, let's get an analyst update on Palantir as well, and then we'll keep going from there.
Moments ago, U.S. commercial revenue up 54% versus last year, and you see a U.S. government revenue also jumping 40%. Stocks up about 14% right now. Joining us now is Jefferies analyst Brent Thill. Brent, it's good to have you on. Want to get your initial reaction to these results, which really do show strong growth across the different businesses, particularly where U.S. business is concerned.
Yeah, they had a great quarter, 30% top line growth, 38% margin. So it's not just a top line fueled story. It's also balanced by bottom line. And the rule of 68 is pretty rare in software. So the results are fantastic. I think the biggest concern on everyone's mind is still valuation. It's the single most expensive name in software. It's twice the multiple of CrowdStrike, which is a very well-run company. So when you have a company that's multiple 2x that of one of the best run stories, you know, that is something that I think investors are still somewhat concerned about. But the print itself was fantastic and shows again the position that they're leading in AI, and it's good to see the government business also show an acceleration as well.
I'm glad you brought up the rule of 68. We always talk about the rule of 40. The fact that they're at 68%, I think that makes them the highest of the tech companies, maybe slightly higher even than Microsoft. I mean, it's something that CEO Alex Karp spoke to me about, and he basically said the reason they have such a strong rule of 68 is because they don't have any marketing. They barely have sales. That's where people tend to spend.
I think that's a point we have to underscore for a second. So Karp says the reason the rule of 60 is so high, or the rule of 40 is so high, is because they don't spend on marketing. But they're a software company, and the highest expense a lot of times for software companies is to acquire a customer, because when you get a customer, you can lock them into a big deal. The fact that that cost is not zero, but going to zero because of that bootcamp methodology, I mean, it is just one of those things we cannot forget how unbelievable that sales culture is. That sales culture is, given there was no sales culture 3 years ago. Like, they still barely have a sales force, but they're putting up these numbers.
Amit, do you remember what is the price target this analyst has? Because he made an expression that felt like, I really feel an idiot.
I think his price target is closer to $28.
Yes, exactly 28.
Yeah. I mean, if you're an analyst at a big bank and you say the stock should be 28 and the stock's at close to 50, you're going to have a lot of clients calling you up tomorrow saying, what the hell is going on? So he's got that look on his face.
So the fact that they are very focused on their engineers and they're very focused on customer support to their customers, both on the government and commercial side, how many levers then does that give this company to pull as it pushes further into this AI application layer?
Yeah, I mean, Alex has said this for years, that they have no sales and marketing, and then everyone scratches their head like, if this is this big opportunity, why aren't you applying more sales resources to this problem? And again, every time he says that, I literally like scratch my head. I don't understand it. So to your point, if they can actually add an enterprise team, if they could market more proactively to the Wall Street community versus just the retail community, and I think there's so many steps they could take to unlock more value from this. And I think the analogy I had was at the beginning when Musk had the Tesla, it was a car that very few could afford, right? And now with the Y, everyone can afford it. Not everyone, but a lot of people can afford it as a car, right? Versus the higher end Tesla. And so I think their move is the same move, which is how do you go from very high end, only a few people can adopt you, to now mass market? And I think it may not be the perfect playbook, but I think they're following that playbook. I think everyone can come to Palantir. They're trying to get you to start small, get big with them over time. Before it was just, hey, you got to write a big check. So I think there's a lot of levers. Again, approach to Wall Street, approach to deal sizes, building that sales team, there's a lot of levers that they can still pull that they haven't. Remember,
Brent,
this is an easy comp too. This is an easy comp. Comps get harder now.
Product-led growth makes sense to me. I mean, Atlassian and others have done it, only spending as much in sales and marketing as you have to, that they seem to still be selling. I don't personally know Alex Karp, but it sure seems to me like he's taking a shot at analysts every chance he gets. You've got a hold on Palantir. It's up more than 12% after hours. Maybe he's talking about you. What does it take to get you off of a hold here with as high as this stock has gone?
I am really curious to see what he's going to say to this question.
Yeah, he likes to attack us and say that we still stay in Motel 6s, which is fine. I'm okay with that.
Okay, but doesn't his background look like Motel 6? Just a little bit. Just a little bit, right? Just a little bit.
Yeah, I mean, look, I think the challenge we have as analysts is we're here to protect investors. And the companies, in terms of the financial momentum, is an A. But when you have a multiple at 30 times, and we've seen this movie before, John, I mean, you had Snowflake trade at 50 times revenue. You had Datadog at 30 times. How did those multiples end? They're all materially lower. And so we think, again, the challenge right now is you're in a level where you have no one in their remote atmosphere in terms of the multiple. So you're going to have to go back to a TAM analysis and believe, almost like when ServiceNow was 30 billion TAM, did you think it was going to get to 175 or $200 billion TAM? And that's the only way you can make it work right now for long-term investors. You have to look at it that way. There's no other way to value it. I mean, there's just nothing remotely close. I mean, CrowdStrike's a company that serves way more people than Palantir and has half the multiple and is the next most expensive name.
Yeah.
So, I mean, it's just, that's the hard part. Momentum's there. Valuation is the concern.
Let's talk about that. We got 20 minutes into the call. Thank you, everybody, for being here. Palantir reported 30% year-over-year growth. His argument is he's trying to protect investors, and he's a little pissed off that Karp's attacking him. Amir, what's your reaction to that?
Dude, I died. Protect investors? What? Like you're not even doing your homework. You don't understand the first thing about this business. What do you mean you're trying to protect investors? Someone put it in the chat, protect investors from these gains. I was like, oh my God, it's so funny.
That's what I was going to say.
So hold on real quick. To piggyback off that, Amir, you're saying that this guy doesn't actually understand the company. Therefore, his valuation argument is wrong. Is that your point?
Well, I haven't read his equity research report on Palantir, so I'm just speaking based on how he talks about the business. I would say, yeah, he doesn't know the first thing about what Palantir does, where they're headed, what the market opportunities are like. He doesn't understand the Karp's approach, the culture, like doesn't know the first thing about them. And hasn't really proven me otherwise all these years covering Palantir. And he's by far not the only one. I mean, just as Karp says, like they're at Motel 6s. Oh man, protect investors. Good one, man.
But at least now we understand why the analysts do not join the earnings call, right?
Oh, yeah.
They would get completely destroyed.
You see, that was such a good question. He got so defensive instantly. He's like, yeah, I mean, they did a good job, but the evaluation.
Yeah,
and
but
then when they attacked him, oh man, he went on the defensive, like, you can't touch this thing. There's nothing even remotely in the same atmosphere. Like, he went really off on them, like when he got like
no, but
they put the fire to him.
I didn't even understand the fact like Wall Street, Palantir has to cater to Wall Street. They're not selling services to.
That was very weird.
That
was weird.
Like, yeah. Is he jealous that retail saw this and he's stuck with a lower price? I didn't get it. Plus, I mean, at the end you saw they put Palantir and then the forward PE ratio, as if that's the defining factor for Palantir right now. Forward PE 120 or whatever. I don't know. His answer was like, I missed it. I look like a fool. Maybe I should go to Motel 6. He burned me on the cocaine stuff last time, so maybe this time I have to somehow defend myself.
And he didn't really answer the question, right? They said, like, what's it gonna take for you to take this off of your neutral rating, which I guess should be a sell considering it's at 28. And he didn't really answer. He just tried to defend his occupation. I don't know.
Arnie, your thoughts?
Well, the reason why these guys become so defensive is because they are hurting their ego. And betting against the ego of analysts is becoming like my favorite discipline as a former analyst by myself. Because at a certain point, you need to accept, okay, I obviously missed something, rather than understanding, okay, what I actually missed. No, it's their fault. Like, it's this price that is stupid. The only valuation, like the only concern is the valuation. And well, we agree with that. Like the only bad thing that could retain us from like adding more is maybe the valuation. But when you hear his arguments, you can see that his arguments are not really deep. For instance, he was concerned about the scalabilities of smaller companies. It's like he doesn't really see a path to mass adoption. And I will say that is exactly what Palantir is showing. And then he says, yes, they have like the highest scores in the industry. But then again, he can't really think without making a comparison with other companies. So first he says, yes, they are like another league compared with other companies, but it's like the price is 2x the other companies. But there's a reason why.
I think I agree with everything Arnie said. I also think we are in a new world. And in that new world, there are people that are analyzing companies in the global capital equity markets that are sitting in their room, wearing a hat, and have a couple screens in front of them. They don't have to be at a bank with big six-figure salary with all this esteem and recognition. That world is fine. That world exists, and it's not to create any antagonism with that world. It's just that there is also a different world, and that different world involves retail analysts like all of us on the call that felt there was something deeper to the story a long time ago. His question about valuation is so very interesting, right? Because Palantir just put up some of the best numbers we've seen in the history of the company as a public company in the stock market, reporting these numbers, 30% growth. And his face is upset because he's still annoyed at valuation. And I think when someone is annoyed at valuation, even though the fundamentals objectively are getting better about a company, it means they are only using the numbers to come to a conclusion about valuation. And they're not using something deeper. And quite frankly, when Karp goes on CNBC and he talks the way he talks and he inspires people, that is something you have to factor into your valuation. I don't care what weighting you give that in the valuation, but these analysts don't factor it at all. And that's something when it was at $6, all of us that were religiously watching this guy, trying to figure out what is his motivation really about, we factor that into our valuation. That's why we stayed for the stock for so long. So I agree with Arnie. I think it's a little bit of his ego. And as of now, you've got to change your updates over time.
I'll tell you something brutal. The reason that guy works as an analyst is because he never had a Tesla or a Palantir in the portfolio. Otherwise, he wouldn't be an analyst working for a bank.
It's a fair point. It's a very
there
fair
is
point.
there is key man risk. Okay, go.
The call is in 10 minutes. We still don't have the presentation. Like, come on, Palantir.
Yeah, I don't have it yet either.
I'm selling everything. This is unacceptable.
What do you guys think in the chat about what the analyst said? Again, it's not to be super antagonistic with him, but if the big concern is valuation, either Palantir is the most overvalued company in the world to not get even a smile out of the guy, and it keeps getting overvalued, or he's wrong and valuation has to be measured in a fundamentally different way. And, Neil's analysis on valuation before the numbers came out was pretty simple to me. They're going to grow into it. And if an analyst can't understand that a company will grow into the numbers like Tesla, Nvidia, Amazon did for years and years and years, then what are they analyzing?
Look, he mentioned the Tesla, but connecting exactly with what you said, the reason why I learned how to value Palantir is exactly because I noticed there was something into Tesla, but I kept reasoning as an analyst rather than a real investor. So I anchored myself the reasoning towards the financial metrics without really understanding all the qualitative aspects that moved the financial numbers.
And one of those aspects is Elon Musk, right?
Exactly,
for good or for bad. Like, he is a big part of the Tesla thesis. Who else is going to bring, rockets into space other than Elon Musk? So if Elon's not a part of your thesis and it's only what is their gross margins, you're missing part of the story, especially when there's people willing to buy because they love Elon Musk. And I think the same thing is happening here to a different extent with Carp. But there's a broader story about the ontology that I don't think a lot of these analysts are keeping up with.
Yeah, no, there is like when you have key man risk, and in this case you have key man premium, and clearly they missed that. Clearly they missed that, and I mean, to be honest, they could have read Amir's article, copy pasted it, and actually make money and look smart, because he laid it out a couple of months ago. He's probably going to do this in the next couple of days and week as well, new models. And if Amir can do it, and he doesn't work for an analyst firm that pays, I don't know what, and pays for free breakfast at Motel 6, then I think these guys could do it as well.
Yeah, no, I would agree. I would agree with that. I'm pulling up their, I don't think they're live yet, guys. They're live at 5 p.m. Let me pull them up.
I mean,
Matt,
the feed is live, but they haven't started yet.
Yeah, they haven't started yet. Matt, your thoughts on what the analyst said? And also, I mean, are you a little cautious about the valuation at 47, even with these results?
Yeah, I'm still a little cautious. I do think that there should be a little bit of a pullback, but maybe then again, it's my bias towards wanting to buy more stock. I mean, I see where he's coming from. I think he's just looking at it from the complete pendulum swinging the other way. I mean, in no way, shape, or form should this stock have been worth $9 before this earnings report, and I'm very sure he might raise it to $10. You know, I don't understand where he's coming from. I understand you want to be cautious, but at least be within the realm of what's reasonable, right? I mean, when we talk about it, we say, okay, we recognize that the price to earnings has gotten stretched. Are we paying for fiscal year 2028 earnings? Are we paying for, you know what I mean? From like a normalized conventional basis as to how you would look at earnings. But to have it at $9, I mean, you think about it in this respect, I don't even remember what a $9 billion valuation would be, but let's just do some quick math. So these guys are going to be coming up with $1 billion in trailing 12-month cash, and $9 times 2.5 billion shares is a $22 billion valuation on the company. Well, you're basically saying, well, this company is growing, and even if it does flatline at $1 billion in free cash on a trailing 12-month basis, you're paying 22 times free cash. I mean, that's still, you know, with the company still growing massively, you're paying very, very cheap multiples at that point. It just doesn't make sense why he wouldn't give it a little bit more. I mean, just looking at the trajectory of how free cash has been growing over the last few quarters, I can understand if 18 months ago he was maybe still giving it a $9 valuation based off the fact that they had just kind of come into the profitability space, and you know, but look, we're 8 quarters into profitability at this point, and we've established a very firm track record of being able to grow earnings and keep costs at bay. So to me, it's a little bit of a head scratcher, and I just think he's completely unwarranted in his valuation.
Yeah, I mean, look, valuation will always be up for debate. Right now, Palantir is up about 12% after hours. It does not mean that the stock can't fall back to $40 or back to 35 or go up to 50. But at the end of the day, all of us are pretty long on the stock. I'm pretty sure people in the chat are long on the stock, which means we just wanted to see the business get better. 4.6 billion in cash, 30% growth, adjusted operating margins of close to 40%. Business got really good. And in 5 minutes, we're going to see Carp on this call, I think, be the most confident he's ever been, because the market's reacting positively to the numbers they put up. The numbers they put up are warranting the market to act positively. And now they just have to have a good call and answer questions in a way that the market likes. And we might see some more momentum going into tomorrow. We do have an election tomorrow to deal with, but we'll deal with that tomorrow. These results seem to be pretty damn good. Real quick on HIMS, guys. I know some of you guys care about that stock. HIMS is up 8%. I don't exactly have their numbers, but if you're in HIMS, congrats. That one is up 8% as well. Just a general trend about the broader market. Almost 70% of companies have beat on the top and the bottom line, which is incredible. So if you're kind of concerned more about the macro economy, Palantir is doing their role to make sure that they're a company that is producing real results. And it just here, the most exciting thing about this, Amir, I want to get your take on this. It doesn't feel like the acceleration is going to slow down in 2025. the stock, whatever happens to the stock is whatever. But any thoughts on acceleration in 2025 continuing to be as strong as it is right now?
Well, first we need to understand where the growth is coming from. Like we don't really have color on that. So to be able to tell, like, okay, are we actually starting to monetize AIP now? How much is like from the largest customers? You know that 20 customers make up some like 46% of all the revenue. Like where's the, like we need more details to be able to do that. And like what's the net dollar retention at? And I just thought before we go into the call, because we still don't have the deck, so I couldn't even make all the charts, but just can you share this quickly? I think a lot of people used to care about this. So SPC as a percentage of revenue is now below 20 again.
Wow, that's great.
I
That's
was
phenomenal.
surprised. I thought it was going to go up. And one more thing, the effective interest rate on the cash actually ticked up. I thought it was going to go down. And 54% US commercial year on year, 12.5 quarter over quarter. But yeah, like if you look, we will have all these charts soon. Unfortunately, they don't give me the deck. And yeah, this is the crazy one. 60% free cash flow margin, adjusted free cash flow margin is insane. I really can't believe that. And as Arnie mentioned, the most powerful aspect here is that, and they even mentioned it on CNBC, is that they don't really have a sales team. Like they don't have operating expenses. Like the profitability, the cash machine that Palantir will become is really like unprecedented in the market. So that's really what I care about. But let's see, when they give us the slides, maybe I'll make some nice charts for you guys.
Amir can live without water, without food, but please give him the data to feed the Excel.
Yeah, come on, man. Excels need the rows and the columns need filling out. Come on, Palantir.
You know, a couple of things that captured my attention, like that 40% year on year on the government. Honestly, like I expected some acceleration. I didn't expect that boom.
And you know how we said that, like it doubled, and it almost doubled again for like 4 quarters in a row.
Well, we noticed that there were many government deals. So clap on us. And further thing that especially like you really care, notice that we achieved this number, like the famous 30% growth, including the SPACs that have a negative impact, which means that if we exclude the SPACs out of the equation, like the real growth is actually higher. Like already last quarter, we got like 27% overall, 30% if we excluded the SPACs, and especially the US commercial side was like very, very strong. And now the commercial side, even including the SPACs that drag down the results a bit, like 3%, it is already staggering. So it's happening.
It's happening. It's real, folks.
So just quick, ex-SPAC US commercial grew 80%, well 79.2 last quarter, and the total revenue growth was actually 30% already. So we actually were at 30% like organically if we exclude SPACs, and then the commercial as a whole, like not only US but commercial, was 40.5. So
yeah, and when Karp says this is just the beginning on that letter, I think that's something we also have to remember. Like, if you're really going to be in this for the next 10, 15 years, NVIDIA is just getting started in terms of their trajectory for AGI. Like, if this is the beginning and all the VCs are chasing a company like Palantir that can unlock AI in the enterprise, because not many companies are going to beat autonomy or robotics. They're going to go for enterprise AI adoption, and Palantir's already the company doing that. So whatever the VCs are chasing is what Palantir's doing, which means the demand is going to be very strong with all these other startups going after that same space. It just means that 40 to 50% growth over the next couple of years should not be impossible. And if Karp believes this is just the beginning, then it seems like he thinks that the trajectory is very, very strong for Palantir. It's the real deal, folks. It feels like we got a good one. We got a real one. It's been a real one for a while. It took a while for the world to believe. And now it seems like the world is starting to believe more that this is absolutely a very real story. We will have the earnings call starting in about 30 seconds. And Palantir also has the best earnings call in the stock market because they actually have a video. So like, and they do it correctly. The mics are working. So it's also nice to see that.
Yeah, sometimes you get pictures from like behind the scenes, but that's all it is one picture. You don't get to see it live a lot of times. And it kind of sucks. Versus this,
Good
you
afternoon.
get to see it.
I'm
Oh.
There we go.
from Palantir's
All right, we're starting.
and I'd like to welcome you to our third quarter 2024 earnings call. We'll be discussing the results announced in our press release issued after the market closed and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our fourth quarter and fiscal 2024 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our results are exceptionally strong. Revenue grew 30% year over year in Q3, driven by an intensifying AI revolution that the US is rapidly driving. Our US business achieved 44% year over year and 14% sequential revenue growth. We are focused on deploying AI models in production amidst the commoditization of cognition caused by the rapid advancement in AI models. Our US government business revenue growth accelerated to 40% year over year and 15% sequentially, while our US commercial business momentum continued with 54% year over year and 13% sequential revenue growth. This AI revolution that is transforming industry as well as government is also transforming markets. In September, the S&P 500 added Palantir to its index, a testament to our exceptional growth, profitability, and market leadership amidst this singular era of accelerating technological progress. We're witnessing the commoditization of cognition with the rapid advancement of AI models. Almost all investment in the AI space has been focused on supplying and improving these models. What will differentiate the AI haves from the have-nots is the ability to maximally leverage these models in production by capitalizing upon the rich context within the enterprise. This is Palantir's focus. We see this in the results we're delivering for our customers. Those who embrace quantified exceptionalism through AIP are able to take advantage of the commoditized cognition in a levered way to advance their differentiation. In this winner-take-all AI economy, the divide is widening between those who are leveraging AIP and those who are not. At a leading global insurance organization, AIP has helped automate key underwriting workflows, reducing the typical underwriting response time from over 2 weeks to 3 hours. We implemented over 10 business use cases in just 9 months at Associated Materials, increasing its on-time, in-full delivery rates from 40% to 90%. At Trinity Rail, it took just 3 months to get to a functional workflow with a $30 million impact to its bottom line. Last quarter, we closed 104 deals over $1 million. The evolving deal cycle as we take customers from prototype to production is having a particularly phenomenal effect on the growth of our US commercial business, which continues to see AIP-driven momentum both in expansions and new customer acquisitions. In US commercial, we closed nearly $300 million of TCV, and customer count grew 77% year over year, compared to 37% year over year in Q3 2023. To highlight a few notable deal cycles, a large American equipment rental company expanded its work with us less than 8 months after converting to an enterprise agreement, increasing the account ARR 12-fold. A bottled water manufacturer, a specialty pharmaceutical company, and an agricultural software provider all signed 7-figure ACV deals less than 2 months after their initial boot camps. In our U.S. government business, we are outfitting our warfighters with advantages over our adversaries. Last quarter marked our U.S. government business's continued strength through the end of the U.S. government fiscal year. It was our strongest sequential growth in 15 quarters, driven largely by our DoD business's 21% quarter-over-quarter growth. We remain proud of our progress delivering the next generation targeting node through Titan, with our efforts fully ramping throughout Q3. Palantir is also delivering AI through Maven Smart System, allowing customers like the 18th Airborne to match the performance of what used to be a 2,000 staff targeting cell during Operation Iraqi Freedom to a targeting cell of roughly only 20 people today. Last quarter, Palantir signed a new 5-year contract to expand these Maven Smart System AI ML capabilities across the U.S. military services, including the Army, Air Force, Space Force, Navy, and U.S. Marine Corps. As Vice Admiral Frank Whitworth recently said, quote, "This partnership is tantamount to ensuring that we keep America safe and ready." The AI revolution is underway now. The chasm between the AI haves and have-nots is rapidly widening, and the whole world is watching. I'll now turn it over to Sean.
Thanks, Ryan. The divide between AI haves and have-nots is rapidly accelerating in this winner-take-all AI economy. What will differentiate the AI haves from the have-nots is the ability to maximally leverage these models in production by capitalizing upon the rich context within the enterprise. That's why our focus on delivering proof, not proof of concepts, continues to pay off. Years of foundational investments in our infrastructure and in ontology have positioned us uniquely to harness and deliver on AI demand. This is Palantir's focus. The market has been focused on AI supply, the models. We see this clearly in the progress, but also in the capital sunk into these models. Indeed, the models continue to improve, but more importantly, the models across both open and closed source are becoming more similar. They are converging, all while pricing for inference is dropping like a rock. This only strengthens our conviction that the value is in the application and workflow layer, which is where we excel. Tapping into this rapidly expanding pool of leverage from AI labor means more than just saving money. It means a massive acceleration of results for our customers. As Ryan mentioned, we have automated the insurance underwriting process for one of America's largest and most well-known insurers with 78 AI agents, taking a process that took 2 weeks to 3 hours. More than the labor savings, this presents the customer with an asymmetrical advantage in the marketplace to bind contracts before the competition has even gotten through 15% of their process. In U.S. government, we automated the foreign disclosure process for sharing critical and timely intelligence with allies from 3 days to 3 hours. The Center for Security and Emerging Technologies at Georgetown published a study on Maven that showed how the entire targeting and fires process can be done in Maven with 20 people. It used to take 2,000. There's a huge opportunity for our customers to automate the tail and liberate capital to reinvest in the tooth across government and commercial. We see enterprise autonomy as a key theme in our proof. Our deep investments in CJAD-C2, Combined Joint All-Domain Command and Control, continue to meet their moments. First and foremost, Maven has powered responses to real-world events across the globe. This past quarter, the Army was the first military department, or MILDEP, to adopt Maven. We're happy with the progress that we continue to make with Army Titan and AIDP, and Palantir's role as the application integrator in the Joint Fires Network. Maven is our military's fight tonight solution. At a time when North Korean troops are in Ukraine, Russia is providing satellite intelligence to the Houthis, and Iran is launching ballistic missiles at allies. We are investing aggressively to expand the perimeter to give our warfighters the unfair advantage they deserve. Advanced multi-int sensor fusion, integrated logistics into fires, and large-scale command and control of swarms of autonomous systems. We announced Warp Speed last quarter, our modern American manufacturing operating system. We as a nation must reindustrialize to prevent escalating conflict and regain deterrence. Before the fall of the Berlin Wall, only 6% of major weapon system spend went to defense specialists, the so-called primes. 94% went to dual-purpose companies who were invested in both freedom and prosperity. Chrysler built cars and missiles. Ford built satellites until 1990. And General Mills, the cereal company, made weapons. Today, that 6% has become 86% when including firms whose only commercial exposure is in aerospace. We won World War II and the Cold War with an American industrial base, not a defense industrial base. And we need to bring that back at warp speed. And in addition to working with new champions like Anduril and Shield AI, we're also working with L3Harris and 2 other of the big primes to help them bend atoms better with bits. Lastly, we continue to invest in AIP as a developer platform. Green Suiters at the 18th Airborne Corps built 15 applications in our developer environment for their August warfighter exercise. Army Software Factory is cranking out software at units in Europe and even for the Vice Chief of Staff of the Army. The 101st built their search and rescue common operating picture to power Hurricane Helene response, built entirely by uniformed service members. We have released our JADC2 SDK, including examples and documentation for government and third-party developers to start building on at palantir.com/defense/SDK. And we have DevCon this month, our first gathering specifically for AIP platform developers across commercial and government, where we will be releasing a ton of new product investments, an enhanced OSDK, more ergonomic compute modules, the multimodal data plane, and much more. I'll turn it over to Dave to talk us through the financials.
Thanks, Sean. Q3 was an exceptionally strong quarter as revenue growth accelerated to 30% year over year, exceeding the high end of our prior guidance by nearly 450 basis points. As America rapidly embraces the AI revolution, this increase in AI demand has driven the outperformance in our U.S. business, which grew 44% year over year. Our U.S. commercial business grew 54% year over year and 13% sequentially. Our U.S. government business grew 40% year over year and 15% sequentially, a 7-fold increase compared to the prior year period growth rate, and the strongest growth we've seen in 15 quarters. On the back of this strength, we are increasing our full-year revenue guidance midpoint to $2.807 billion, representing a 26% year-over-year growth rate. We delivered these outstanding top-line results while expanding adjusted operating margin to 38%, highlighting the strong unit economics of our business. Our revenue and profitability drove a 4-point sequential increase to our Rule of 40 score from 64 in the second quarter to 68 in the third quarter. We had an exceptional cash flow quarter, with cash from operations of $420 million and adjusted free cash flow of $435 million, representing margins of 58% and 60% respectively. On a trailing 12-month basis, we generated over $1 billion in adjusted free cash flow for the first time in the company's history. We're also proud to have joined the S&P 500 last quarter, underscoring our sustained profitability and growth. Turning to our global top-line results. Revenue continues to accelerate as we see continued momentum from AIP. We generated $726 million in revenue, up 30% year over year and 7% sequentially. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 32% year over year and 7% sequentially. Customer count grew 39% year over year and 6% sequentially to 629 customers. Revenue from our largest customers continues to expand. Third quarter trailing 12-month revenue from our top 20 customers increased 12% year over year to $60 million per customer. Now moving to our commercial segment. Third quarter commercial revenue grew 27% year over year and 3% sequentially to $317 million. Excluding the impact from strategic commercial contracts, commercial revenue grew 30% year over year and 3% sequentially. Third quarter commercial TCV booked was $612 million, representing 52% growth year over year and 62% growth sequentially. Our U.S. commercial business continues to see unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. as we continue to deploy AI models in production. Third quarter U.S. commercial revenue grew 54% year over year and 13% sequentially to $179 million. Excluding revenue from strategic commercial contracts, U.S. commercial revenue grew 59% year over year and 12% sequentially. In the third quarter, we booked $297 million of U.S. commercial TCV, representing 13% growth sequentially. Total remaining deal value in our U.S. commercial business grew 73% year over year and 7% sequentially. Our U.S. commercial customer count grew to 321 customers, reflecting 77% growth year over year and 9% growth sequentially. We generated $138 million in international commercial revenue in the third quarter, representing 3% growth year over year, but a 7% sequential decline as a result of continued headwinds in Europe and a step down in revenue from a government-sponsored enterprise in the Middle East. Despite those headwinds, we continue to build on our transformational work with some of our largest international customers, including signing a multi-year renewal with BP. We also continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond. Revenue from strategic commercial contracts was $9.6 million for the quarter. We anticipate fourth quarter 2024 revenue from these customers to decline to between $6 to $7.5 million compared to $20 million in the fourth quarter of 2023. We continue to anticipate 2024 revenue from these customers to be less than 2% of full year revenue. Shifting to our government segment, third quarter government revenue grew 33% year over year and 10% sequentially to $408 million. Third quarter U.S. government revenue accelerated to $320 million, representing 40% growth year over year and 15% growth sequentially. This acceleration was driven by continued execution in existing programs, new awards reflecting the growing demand for AI in our government software offerings, and favorable deal timing in the quarter, coupled with a government year-end cycle. Third quarter international government revenue was $89 million, representing 13% growth year over year, but a 5% sequential decline as a result of revenue catch-up in Q2 that we noted last quarter and less favorable deal timing. Third quarter TCV booked was $1.1 billion, up 33% year over year and 16% sequentially. Net dollar retention was 118%, an increase of 400 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q3 of last year, as we see the effect of the AI revolution in both industry and government. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the third quarter with $4.5 billion in total remaining deal value, an increase of 22% year over year and 4% sequentially, and $1.6 billion in remaining performance obligations, an increase of 59% year over year and 15% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 82% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $276 million, representing an adjusted operating margin of 38% and marking the 8th consecutive quarter of expanding adjusted operating margins. Q3 adjusted expense was $450 million, up 6% sequentially and 14% year over year, primarily driven by our continued investment in AIP and technical talent. We continue to expect expenses to ramp through the fourth quarter as we invest in the product pipeline and accelerate the journey from AI prototype to production. In the third quarter, we generated GAAP operating income of $113 million, representing a 16% margin. We generated GAAP net income of $144 million, representing a 20% margin. Third quarter adjusted earnings per share was 10 cents, and GAAP earnings per share was 6 cents. As previously communicated, we've aligned our compensation program with the performance of the company's goals, including its stock price. On the back of the company's strong performance, our inclusion in the S&P 500, and the increase in our stock price, we will continue to monitor if we become required to accelerate stock-based compensation expenses if certain market-based vesting criteria are achieved earlier than expected. Additionally, our combined revenue growth and adjusted operating margin accelerated to 68% in the third quarter, a 4-point increase to our Rule of 40 score from the prior quarter. Turning to our cash flow. In the third quarter, we generated $420 million in cash from operations and $435 million in adjusted free cash flow, representing a margin of 58% and 60% respectively. For the first time ever, on a trailing 12-month basis, we generated over $1 billion in adjusted free cash flow, representing a margin of 39%. Through the end of the third quarter, we repurchased approximately 1.8 million shares as part of our share repurchase program. As of the end of the quarter, we have $954 million remaining of the original authorization. We ended the quarter with $4.6 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q4 2024, we expect revenue of between $767 and $771 million, and adjusted income from operations of between $298 and $302 million. For full year 2024, we are raising our revenue guidance to between 2.805 and 2.809 billion. We are raising our U.S. commercial revenue guidance to an excess of 687 million, representing a growth rate of at least 50%. We are raising our adjusted income from operations guidance to between 1.054 and 1.058 billion. We are raising our adjusted free cash flow guidance to an excess of 1 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Given how strong our results are, I almost feel like we should just go home. But you know, we've been saying since we went public in a DPO that we would build infrastructure to make America and its allies the dominant force in the world. We claimed to much skepticism that this would be done in a software product, that defense and commercial industry would be driven by software, hardware, hybrid technologies, that there were very few companies in the world that could actually do that, that these companies are basically only built in America, that the companies that have tried to do this that aren't Palantir are built by ex-Palantirians, that the financials of Palantir would flow from our products and our culture and our way of implementing, that we would bring violence and death to our enemies while targeting and general issues of safety better for our allies and for Americans, that we would stand by our values in thick and thin, including that the West and America are superior ways of organizing and that this is a great country and historically anomalous in its greatness, and that we would build a company with the best people from all over the world, but primarily from America, to power America and its allies. And even we are shocked by the 44% growth in the US off of a $2 billion base. So this is not some speculative small base, 44% growth. Even we are happy to see that we grew 30%, to see the real reacceleration in USG to 40%, and to see the very, very strong results in US commercial. Also, allied countries that have begun to realize that AI is the way in which to make their defenses superior in the face of brutal, heinous, immoral, and often terroristic enemies, where you need a superior form of fighting that's both safer for you and more dangerous for the adversary, and controls how you hit them and when and where, and allows you to maximize your results. It is also just jarring to see how America adopts the most important, most agile, and most impactful technology, independent of who the purveyor and builder of that. We are building this company, and we believe we're at the beginning, and watching American adoption both in government and commercial, while not forcing us to change, while accepting that many of the ideas of how to make your enterprise better, whether it's insurance has been mentioned, oil and gas, any kind of complicated manufacturing, supply chain, healthcare, obviously defense and intel, that a new and different way of building software and implementing it, meaning the infrastructure, is where the value is, despite the fact that, as you may have noticed, many have noticed, that the experts that write about these things seem to believe the commodity, i.e. the LLM, is the valuable aspect of this, and that the actual asset, meaning how you manage the commodity, is the actual value. Despite great skepticism about our view of how to do this, the market seems to have decided what works, no matter how theoretically appealing the idea is of building software around how you may have learned to build it in business school, is to you as the person not buying the software. The people buying the software, who are allowing our market to grow at 30% in aggregate, 44% in America, 40% in US comm, and dramatically 40 in US government and dramatically in US comm, are speaking with their feet and their implementations, and we're very, very proud of that. And I'm particularly proud to see the warfighter adoption of this. You see every part of U.S. government, including the White House, Congress, defense, intel, beginning to embrace the application of large language models in infrastructure, obviously something that Palantir is particularly specialized in. And we are really, I think, as a company, enjoying this phase. When you build a company over a long period of time, there are good and bad phases. But to see, in fact, our view of what it makes to make enterprises stronger and better show up in these dramatic results is super gratifying, and we plan to continue.
Thanks, Alex. We'll now turn to a few questions from our shareholders before opening up the call. We received a few questions on AI. How will Palantir differentiate its AI offerings from others, including the model creators? And how is AIP different, and how will Palantir maintain its competitive edge?
Well, Alex talked about how the models, the LLMs, are commoditized. But if you look at the models, you see that they're getting better, which is awesome. But they're also getting more similar across both closed and open source models. While they're improving, they're converging upon each other, all while the price of inference is dropping precipitously. And that's, so if you even look at these model companies, they have to build applications around these models to extract value. That's where we have a decade-long head start. We've been building the forge to create and implement AI applications at scale throughout the enterprise. And that differentiation starts with the ontology, using the ontology to drive AIP across these applications. When you look at the legacy software companies, I'm not sure they understand it yet. But when you look at the innovative Silicon Valley companies, they recognize the wall of tech investments this implies that's in front of them that's going to act like a great filter.
I would say, kind of an addendum to that. Well, first of all, I think people are beginning to recognize we were right, and these numbers show it. So that creates a dynamic of, okay, well, if you can actually extract value from large language models in any context, then clearly the company that does it is very valuable. And a lot of our customers, even a year ago, they were kind of skeptical of, can you make these things useful? I would say most of the customers I deal with are pretty skeptical. You can make large language models do anything but do a science experiment. And in a weird way, even though the models are improving, they're meeting up against greater skepticism among clients because clients have tried them and it's just a high school experiment. And then if you get to, so it's like the market and analysts seem to have put a lot of credibility into the models, and we do too. We think they're very valuable when managed correctly, when used in a way that an enterprise can understand. And one of the problems that people have is if you're not involved in enterprise software, it's very hard to understand how an enterprise actually works. You cannot take a large language model that gives you an ELO score of 1200 and use it on targeting on the battlefield. There's a security model. There's a way in which the data is understood. There's certain things you can't share. There's places you would use certain models, but not others. How do you bring that back to your corpus of truth to understand in a lethal context who dies and who doesn't? And you have very similar use cases in underwriting and in healthcare. And so understanding the actual way technically enterprise is driven as embodied by Foundry, as embodied by our abstraction layer on top of Foundry, which includes all those nuances, which we call an ontology, as powered by AIP, are all sorts of things that our clients are beginning to discover every day. Of course, the main way they're discovering it is, holy shit, I can do this in an hour that used to take 5 hours or 50 hours, or I could have 2,000 people or 20 and 10. And by the way, on the targeting on the battlefield, we've talked about like basically 2 orders of magnitude in reduction of people, but it's also in many cases 2 orders of magnitude in the production of your ability to do things in an efficacious manner. There are whole global events now that would be very different without our ability to manage these things in our infrastructure. And that's us obviously generating a lot of excitement internally that spills into our earnings.
Thank you. Our next question is from Ryan, who asks, as Palantir continues to invest in new AI technologies and expand globally, how are you balancing these investments with maintaining or improving profitability and operating margins, especially given the current macroeconomic challenges?
We aren't just balancing, we're excelling. Revenue grew 30% year over year in Q3, 44% in the US in the quarter. And you couple that with our expanding margins in the quarter. We did 38% adjusted operating margin, our 8th consecutive quarter of expanding margins. And we posted 68 in the Rule of 40 score. At the same time, we had an outstanding adjusted free cash flow margin in the quarter, 60%. And so looking forward, we're raising guidance. We're raising guidance for adjusted free cash flow to an excess of $1 billion for full year 2024. We're raising adjusted operating income guidance to an excess of $1 billion, well over that actually, which represents a 39% margin in Q4. And we're doing all this while we're continuing to invest at the beginning of the AI revolution. There is an incredible amount of demand there, and we're investing in technical talent, and we're continuing to build out world-class product.
There's a steelman version of this, which is given how well you're doing, given you've really accelerated to 30%, given the US is growing 44%, why don't you blow up your rule of 68, which, by the way, to my knowledge, is the single best of comparable companies in the world and significantly better than many very strong companies. So an average normal way of looking at Palantir would be like, oh, great, you have a 44% growth on a $2 billion base in the US, and you have a rule of 68, get that 68 down to 50, and maybe you can grow. But in fact, that way of looking at a business misunderstands the way in which Palantir builds. We believe that by investing, and we know at this point, instead of trying to have 10,000 clients, all of whom hate you, it's kind of what people want, 10,000 clients that hate you, but they can't get rid of your product. We want a smaller number of the world's best partners that, quite frankly, are dominating with our product. And the way you do that is by not blowing up your margin and getting 10,000 salespeople. It's actually by going deeper on the product. And in fact, what we see is the deeper and better the product, the more we drive sales, the more we have our cultural singular advantage as Palantir, not as a commodity product. It's like, we are not a commodity. We do not want our customers to be commodities. We want them to be individual titans that are dominating their industry or the battlefield. And we reflect that in how we do things. We are not trying to be your average Harvard Business School preferred company with like that reduces the margins, has a thin product, and then has a lower rule of 40 and presumably higher growth. By the way, I don't think you'd get higher growth than what we have. Honestly, although we of course are always pushing and want even higher growth, the people who tend to ask these questions tend to be modeling companies with 20% growth and lower margins. We have 44% growth in the most important market in the world, arguably not the only, but by far the most valuable market in the world, while having a rule of 68, i.e. the best in the world. And we're going to maintain the contradiction of having both high margins and high growth. It's not one or the other. They're actually interplayed, and they're not a contradiction. They power each other. That's how you know you have world-class products. That's what you see in your numbers.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
A great quarter, and congrats to you and the team. So my question is, with boot camp conversions, has it even surprised you just how quickly from a customer coming into a boot camp, potential customer, to conversion to mega deals, what you're seeing, and what do you think that says about your process and where we are in this AI revolution where Palantir sits?
Yeah, I think obviously the most indicative of what we're seeing and the impact is the results, the 44% year-over-year growth in U.S. commercial, 44% year-over-year growth in U.S., 54% in U.S. commercial, the sequential growth we're seeing. I think, I gave examples of boot camps where we're seeing multiple different customers across different industries that are going from the initial boot camp to a 7-figure ACV deal within a matter of less than 2 months. We're seeing that, we're feeling that in the conversations we have with customers in then our push to go from prototype to production and the expansions we're seeing at customers. And I'm seeing that, in the conversations, as we said, really it's going to be the AI haves and the have-nots. The haves are moving quickly, making decisions quickly, and adopting quickly. And I'm feeling that in the conversations we have with them in the conversions we're seeing.
I would just say that the most surprising thing is just how there's a small number of increasingly large number of customers, meaning that get this, and they are just moving really quickly. And anyone who's involved in the enterprise, so if you take company XYZ, and then 5 people go to a different company, the first thing they do is pick up the phone and call us. And so it's just the way in which this just expands in the US and in some other countries, but especially in the US, from anyone who touched this wants to use it in any part of anything they're doing. And it goes from one person. And then there's this transience in America where people really are moving to different companies a lot, and they're talking to each other. And there's just a willingness to take business metrics and use those business metrics against technology that's not ideological. And if you look at even 10 years ago, there was no form of software that had this kind of adoption and this kind of readiness. And also it was conversely just not possible to show this kind of results this quickly. And we tend to focus on the results on the outside, but in, AI and large language models also allow us to scale our product on the inside. So one of the unfair things about this revolution is if you have business acumen and you have a product that is good or stellar, in my humble opinion, you can make it even better internally and externally. And so that allows us to also scale many, many more people to many, many organizations with the same number of people, as long as they're the best in the world. And so it's really this from touch to expansion, however we do it. Some of it's boot camps, but some of it's just like, hey, I used to work at a company. I heard really good things about your product. I want it tomorrow. How quickly can you get here? What is the first use case you could do? And then the first thing that they always ask is, well, show me some of the things that you've done in other places. Like even cross-fertilization between government and non-government. I was at an important government entity a couple of weeks ago, and they obviously Maven would be very useful for them. But then they start asking, well, what are you doing for hospitals? Could you use this on FOIA requirements? Could you use the same thing for managing our people? How could you make sure that our people are safe and happy? How do you move parts? How do we do procurement? A lot of the things Shams, so there's like a massive cost fertilization, even between verticals that otherwise would never talk. In the past, government use cases non-government use cases were just not things we were doing in government. And certainly from industry to industry, we did not have this, from real estate to supply chain to large hospital things. The use cases that they're doing inside our product, they are technically basically the same for us.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Hi.
Hey.
We can't see you, but it's okay.
Okay. new camera and stuff.
Okay. Yeah.
So on government, U.S. government is up, like 40%. And this is in line with what we saw at USA. L3Harris, Anduril, Shield AI, but others were advertising Palantir logos. And they were like advertising partnership with you. What changed for them to actually want to partner? That's the first one. And then, Dave, if you don't mind giving an update on the strategic commercial contracts and how are you thinking about the remaining deal value as we see news about Lilium, but also a recent pickup of some like stock awards as a form of payment from these companies. Thank you.
On the first bit here, there's really two dimensions to what we're seeing as acceleration in partnerships on the US government side. The first is something I've talked about earlier, which is Mission Manager. Really, how do we take not our software, but our software infrastructure, Rubix and Apollo, as radical accelerants for these companies to get to revenue, to service their existing revenue in a more profitable way and expand their market access. So that's been just a clear win across the board. That's good for the government, it's good for these partners, and it's good for us.
I don't think Sham's taking enough credit here, or Sham, Aki, and others. So one of our biggest issues in the U.S. government would be just simply a friction coefficient. And we had the problem that although we are completely focused on helping the U.S. government and allies first and ourselves second, and that's one of the reasons most of us at the table are still here. There was a general perception a couple of years ago that, basically, and you see it in our numbers, Palantir wins, and maybe we win too much and we keep winning, and people are like, well, Palantir makes all this money, someone else has got to make money. And one of the things Sham and I would say Aki and others did a tremendous job of is like, look, we're in this for the supremacy of US and its allies, and we're going to prove this by opening up part of our products and allowing you to sit on government data, which is, lay people assume you could just put a product on government data. You can't do that. There's all these tech products we've built that allow you to safely and securely work directly with the US government. And we've begun offering that to all sorts of defense tech startups and begun partnering with more established large integrators like L3 and many others actually. And the strategy there was, look, if we actually believe what we believe, let's show it. And this strategy, which Sham led and Aki empowered and also kind of did incredible work on, has led to a situation where most people involved in tech innovation now view Palantir as their ally. And so instead of going into every meeting saying, oh yeah, Palantir's great, but their fearless leader is batshit crazy, and he might go off to his commune in New Hampshire and whatever they were saying, it's now like, yeah, the products are the best and we have great products. And so that's a really important shift. And that was a business strategy, and it really was done by others. And that has shifted our ability to get to market because, most people don't want to resist. They're not hating the player. They're playing with us.
Alex is always a tough act to follow, but the second part of that I'll just close out with is really helping these companies with their production. In the same way that we help Airbus build every plane or Chrysler build every car, how do we help L3 and Anduril and Shield and all of these new entrants and existing primes build their weapon systems better? And in particular, where they have fixed price, drive margin expansion as a consequence of doing that.
And then on the strategic commercial contracts, they're a tiny part of the business, right? Basically 1% of revenue in Q3. On the forward-looking metrics, it's even it's quite de minimis, and the program ended 3 years ago. So, we can still answer the question. It's basically not relevant anymore.
Thank you. Alex, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
As usual, we're in it together with you. Besides making America even stronger and better, and our allies stronger, better, and all of us more lethal, besides protecting Palantirians and most ex-Palantirians, our individual investors are near and dear to our and certainly my heart. And I love it that you guys are winning. There always be ups and downs in building a business, but we're definitely fighting for you guys. And the decision to do a DPO, where which is essentially was a decision to make sure that individuals got to participate, and your willingness to spend time and look at what we're doing and actually look at the facts on the ground and not just to read theory has been crucial to Palantir as a business, and it's part of what makes Palantir great and also our nation so great. So thank you, and thank you for your support.
Thank you. That concludes Q&A for today's call.
What a quarter, ladies and gentlemen. I think we got to ring the bell one more time. Palantir has officially entered into their growth stage as a company in the S&P 500. I've got a lot of thoughts. That was an incredible call. I'll let one of you guys go first, and we'll dissect what we heard from him. Neil, you want to start off first? What was your reaction to that call?
As always, the prepared remarks / whatever they're telling us is always better than the analysts, because again, the analysts are just two, then still asking quasi the same questions every single quarter, right? Trying to get that bootcamp number from bootcamp to actually deals getting paid. So yeah, from the analysts, don't really get that much information. But overall, I mean, you can feel that, again, as I said it 3 months ago, they know in what a good position they are. So they're not afraid to show it. And to be honest, the numbers speak for themselves, right?
Agreed. Okay, I'll give some of my thoughts and then I'll get into you guys. So I mean, I'm sure we'll all have videos and articles coming later this week where we go a lot deeper into this after watching the call again and reading through the numbers. But high level, that call to me was Karp not only being confident, but Karp having the numbers to back up his confidence, right? As he said at the end, building a company is very hard. There's certain phases that are good, certain phases that are bad. The reason I think he's saying this phase is a phase that Palantir is loving right now is because the numbers are supporting what they're saying, right? Like when you say we're the best and then you grow 44%, it's like it's backing you up. It's not just some fairy tale that you're talking about, which is what they kept having in terms of confidence in 2022, but the stock price didn't reflect it. The numbers definitely didn't reflect it. And so it was, that was a rough time as a company. Now things have changed as they've reaccelerated. And so I think his confidence, his energy, same thing from Sham, Glazer, Ryan Taylor, all these guys, really, you could feel that they were excited to have Palantir put up the results they put up today. A couple things I got from the call in particular. On the answer about AIP bootcamp conversion. So Dan didn't specifically ask for a number because he knew he probably wouldn't get the number in terms of conversion rates. But Karp took that question as an opportunity to talk about the types of expansions they're seeing in these bootcamps. So I think he talked about a hospital that asked if they could do this and this and this after they showed one of the use cases. And that goes back to Dan's thesis, which has been the thesis for the past year and a half now, which is that the use cases of AI, again, these GPUs that NVIDIA is selling mean nothing unless there's a use case for actual companies or consumers around the world. The use cases that Palantir is able to show in these boot camps seems to flurry and permeate into more use cases, and that develops the time to value and the speed at which they're able to close the deal. And so I think Karp kind of really highlighted and underscored why that was so important, and I think that's something that the street's going to be happy about. And final thing I'll say is on the government question, when he interrupted Sham and said that Sham's not taking enough credit for this, this was one of the happiest moments I had in this earnings call. Basically, if you believe in Palantir, you believe in the West. You believe in America, you believe in defending America, and you believe in defending the West. When Karp says, hey, Sham's not taking enough credit for this, I think it's because, and Sham just published a website, 18 theses. You guys can go check it out. I'll put it in the chat right now, where Sham's talking about the fact that America is a monopsony and we need more competition in regards to government procurement of software. And so Karp's essentially saying, Aki, Sham, all these people in the government space, they aren't selling software to the government. Those are the guys on the front line really trying to get this software into the government just to make money. That's part of the business. You got to make money from the government, and government grew at 40% in the US business, which is insane. But they're doing it because they actually believe in America. And they're proving that they're doing it because they're not accepting money without showing results. They're opening up the platform to all these other defense tech startups that are not as big as Palantir, but they want an opportunity to. I mean, Palantir is literally giving up part of their business to other defense tech startups to make sure those defense tech startups have a proper accreditation and securitized module to be able to even sell into the government. So I think that the final thing that Karp says right there on the government business, the reason it's growing and the reason it will continue to grow is because Palantir actually cares about helping the government, which is the same philosophy they've taken to commercial over the past 5 years. They actually care about helping BP and Airbus, which is why they're getting these extensions and ultimately why the market's rewarding them for the results that they're putting up. Amir, your thoughts on this call?
Yeah, well, it's still fair. I have a slightly different take on the answer to Mariana's question. I think what they try to outline there is that the reason they're growing so much in US government is essentially because of the moat that they have developed a way to sit on US government data, which no one else has done to date. And they now allow others in on, like, everyone can have a piece on the cake through Palantir. So, and as he said, if we believe what we believe, then let's show it. And there's no reason for other businesses or companies to find a way to do it themselves when they can just partner with Palantir that has already sold this over a 20-year period, and they're the number one. So as he said, it's now shifted to everyone wanting to partner with Palantir and not hating the player, but instead playing with them. So I thought that was good. And she's so funny. She snuck in another question at the end because she knows she only gets one. She's like, by the way, so that was funny. But no, my other takeaway that was kind of just going from the CNBC interview with the Brent Thill, they really laid it out for all the analysts. Like, LLMs are a commodity. This is things that we already understand, like on the panel and most of the viewers, I believe. Like, the models are getting better, but also becoming more similar. That was a great quote by Shyam.
They spent a lot of time talking about the models, right? I mean, if you didn't understand their perspective, you should understand it by now.
Yeah, so it was like aimed at Brent Thill and his perspective. Like, they just don't get it. Palantir is agnostic. They're ready to build with whoever the winner is, or build with all of them for all they care. The money is not going to be in the LLMs. It's going to be in the solutions that you can build as a result of the LLMs. And also the approach, because they talked about the margins, like with Brent Thill, like just the analyst versus reality conversation. Instead of having 10,000 clients, they have a smaller number, but all the clients are elite. And what this does is that they have the most demanding clients that are paving the way for their own competitors. So it drives sales for Palantir, because if the best businesses are using Palantir, all their competition are also going to want to jump on Palantir, and the use cases are already present. They've already solved all the issues, and that's what's driving this high margin, high growth dynamic that the analysts don't seem to understand. That Palantir doesn't need to spend all this money on marketing, because, as Mariana mentioned, other people are advertising Palantir as their partner, like, proudly. So those are some of my key takeaways. I have a lot of charts, but maybe after everyone's given their take, we can go through the charts.
Yeah, I agree. Arnie, your thoughts on the call?
Sorry, I was muted. So I was willing to connect exactly to what Amir said. Like, what we are seeing, despite not explicitly mentioned, is network effects are happening. We talked about Palantir network effects like a couple of years ago. Well, it was more an hypothesis rather than a real substance. Thinking of, look, behind the company, there is Peter Thiel, who is like the mastermind, like the investor who deeply invests into network effects. And the Palantir seemed ready, like, to unlock network effects, but it felt like these network effects were not really taking effect until now. Now, like, Karp was very explicit into saying, look, customers come to us because of our brand, and then when we are with us, they ask, okay, but what are the other use cases that you are actually developing? And then now they can show literally excellent use cases in any vertical, and they can also show that people moving from one company to the other are willing to build again. So people are craving to build, and that is what could trigger now the real next phase.
Agreed. Matt, your thoughts?
So my notes aren't necessarily strictly about what was said during the conference call. I think all that kind of hit home, and I think that all was all well and good. I'm just kind of going back to a conversation we had last Friday about NDR and where we think that if you focus on NDR and it growing to, say, 118%, like you can see on slide 28, how you can really focus on just getting the product in front of more people while maintaining a very decent revenue growth rate to appease investors. And because to me, I more so care about what the number of clients and revenue and everything the like looks like in 20 years time than I do today. So to me, it's almost like you kind of have to balance the two. You have to keep, people happy, and at the same time, to me, you need to just get the product in as many hands as possible. So I hope that they balance that a little bit. And I think Karp did iterate that, like, focus on a rule of, 50 or 60 or whatever. And it's about that balance of being sure that, to me, you get it in front of as many people as possible, because I would rather people try the product and we find out who enjoys the product and wants to use the product as fast as possible. Because once you get them in the door, they're going to build their operating systems and everything off of that. And they're going to ontologize their entire, say, network of different things that they need to be keeping track of. And once that starts to happen, it grows like a weed. And so to me, it's almost more important to get the product in front of as many people as possible. So I'm honestly okay if it doesn't go to a 40%, 50%, or however much revenue growth year over year. I think that might be a byproduct of just how good the product is. But to me, I think that net dollar retention is the thing that matters to me most. And I think it was very impressive, 12% year over year growth from a top 20 client perspective, $60 million per top 20 client. That's insane. So anyway, just some food for thought there. I mean, the numbers have been phenomenal. I'm honestly blown away. I was expecting, the stock price obviously to retrace from what I was expecting on Friday, which was a 35% year over year revenue growth, to kind of stay flat. But I think the investors are still calm, knowing that we're continuing to accelerate, knowing that U.S. customer growth is still there. And I guess the last note before I hand it back to everybody, the only thing that I can see that I think we all agreed that 30% was reasonable for year-over-year revenue growth. So I think we're all on the same plane there. The only thing that I was slightly down compared to where I was thinking was the year-over-year total customer growth, which I had as 638, which would have been about 7.5% quarter over quarter. And 41% year over year, and it came in at the 629, 39% year over year as they're displaying. And what is that, 6%? So still phenomenal, right? So I was predicting the moon, but I was comparing to what I was kind of just saying, what if we hold flat in terms of year over year customer quarter over quarter growth, which was 7.5%. And we held that from 2Q into 3Q, and that's where I got that 638 number. So other than that, back to you guys.
Look, that is something that we were almost skeptical, or at least we wanted to have some better explanation. Amir and I, but all of us were a bit concerned. Maybe concern is not the right word, but we were willing to understand better, okay, what's the rationale behind not trying to capturing more clients. We noticed that the potential, especially after bootcamps, is way bigger than before. Why only 30 clients or so? And Karpam tried to explain that. So I'm very happy that he underscored, look, we are growing now at a rule of almost 70%. Experts would tell us, okay, now you are in the position where you can sacrifice some margin to keep boost growth for how much you want. Essentially, what we were also discussing as an hypothesis. Okay, you have all this margin. Why don't you exploit this margin to go to a like 20-30% margin, which is already great, and you don't boost growth? And Karpa essentially said, no, no, we don't want to have 10,000 clients now. In the same way, don't want to have 10,000 salespeople now. What we really want to do is to have the best partners. And this connects with how you actually build the best network. The biggest networks start small. And for instance, in order to have Facebook, you didn't have like the platform immediately open to anyone. You needed first to target what are your best clients, your best users first, because if you can get them obsessive, they will be the one spreading out the word. And in reality, that is actually what is happening. Carps want to build the deepest product, the best product, not commodities, and to make the few companies that understood that Palantir was actually not only valuable, but their source of alpha becoming so dominating that all the others will just need to catch up.
Agreed. Amir?
There are some amazing stuff in this quarter. First of which, for the second quarter in a row, they actually increased the average revenue per client. And this excludes the top 20 because the top 20 make up 45% of the revenue. 2 quarters in a row now that they're accelerating this. And I thought it would be like close to impossible because as they get all these new clients and have a higher client base, like we know that Palantir as an offering is much more lightweight today than it was like 2 years ago when you had to buy like a whole foundry stack to solve like you can buy it in much lighter expenditures. So to see this is kind of amazing. Average revenue per client increasing for 2 quarters in a row now, and it's the only 2 quarters in reported history that it actually increased. That was great. So I have the revenue growth excluding SPAC. So year over year, US commercial is at 67.2, and year over year revenue excluding SPAC is roughly 32, so 31.82. Like, do you just want me to go through everything and then we comment?
No,
or
we'll save for the weekly because there's a lot of numbers. So
yeah, okay.
Friday we'll go through all
so okay, stay tuned for that. I'm gonna go through the charts or my YouTube channel. Why not?
Yeah, everyone's YouTube and Twitters are in the description. So if you are here, please make sure to check out Arnie, Neil, Matt, and Amir in the description. Follow their YouTubes, follow their Twitters, especially if you want to keep up with more Palantir content. I think we'll end it out with some closing thoughts. And there's a lot to analyze in this quarter. Stocks up It's holding above 46 right now, which is, a new all-time high. And I know election volatility will be there tomorrow, but these results were exceptional. And if the street feels that they're missing out on the story, we might see some added momentum tomorrow. But yeah, I guess we'll end it out with closing thoughts. Matt, any final thoughts on these numbers and the call itself?
I would say, I mean, it's nice to see the XSPAC number, Amir. So appreciate you sharing that, the 32% year over year. I've just continued to be amazed at the company and the growth, to be able to continue to find clients and to be able to add value, which I think is most important. And it just goes to show that Wall Street isn't always right in how it acts and asks companies to deliver. Sometimes you have to do your own thing, and the byproduct of that will be revenue growth and adding value to the bottom line. So it just goes to show you that companies need to focus on themselves sometimes and not necessarily listen to Wall Street shareholders. And I think it's always very funny, and I have this dichotomy in my mind as well. Looking at, working for a company that, reports earnings on the stock exchange, and also just listening to many companies over however many years. I always say we always listen to our shareholders, right? And there's a big discrepancy between the institutional shareholders and the Vanguards, BlackRocks of the world, and the retail investors of the world. And this just goes to show you that these guys are truly focusing on what the retail investors of the world want, and they know better than any of us as to what they need to deliver. And I think that that's obvious with what's going on, what we see with Maven and Warp Speed and everything else that is yet to come down the pipeline. But we will find out in many moons to come. Company performance is continuing to be stellar. Stock performance is over the moon. Hopefully we see a retracement. I like to buy more stock. But congrats to everybody, in the short term. Really hoping that we see a pullback so I can buy more.
Neil, final thoughts?
Yeah, I'll first start by saying that Emiliano and Peter tried to send me merch, but X made sure that message got not only in my message request, but inside the message request, it got even behind that with all the spam of crypto and OnlyFans accounts. Like, how crazy is that? So first of all, thank you for the future merch that will arrive. But to conclude, it's a great quarter. It shows yet again that despite them making crazy statements in the past, right? We're going to take the whole market. We have no pricing strategy and all of that. It works. It works out because their product actually solves problems, right? We've been talking about the fact that other software companies have always come out with solutions for problems, but then they come out with other products that solve the same problem, which doesn't make sense. So now what we're seeing are Palantir clients that are using Palantir, having solutions, and showing their competitors, look, we are winning. If you don't want to lose, maybe you should try it as well, right? Because that's basically what bootcamps are. It's those companies coming and showcasing their problems and solutions and what Palantir is solving. So all going according to plan. If the stock goes down, great. If not, okay, great as well.
Okay, Amir, your final thoughts.
For the longest time, if you asked any one of us, anyone that's been following Palantir, if you ask them, okay, so what's the most important thing to look for in these earnings calls? And most of people would say, well, they just need to keep increase the client count. If we increase the client count, we're gonna start to grow. And if Carp just schooled us and showed us that's not necessarily the case. It will be with time. I'm sure that they will need to scale up the customer count. But I was shocked. We decreased. We were pretty disappointed last quarter with 39 net new customers. This was 36. So I was I really need to think hard and some inner discussions to try to figure this out. So obviously I don't understand the company as well as I thought I did. And I'm sure that as each quarter passes for Palantir, we just keep learning more and more. And that's so fascinating with this company. Just when we think we have it figured out, we really don't. So exciting quarter, a lot of interesting data. I'm sure we'll get into it on the weekly, as we mentioned. And I'm stunned.
Arnie, your thoughts? Closing.
it is really beautiful to see exactly what Amir was saying. We have been studying the company for a long time. More or less, we have been here for like 4 years.
4 years, yeah.
So it takes a lot of time, a lot of effort, especially since initially the information was actually hard to digest, especially from a non-technical background. Yet here we are, and every quarter we get a little bit schooled. And despite we have a reasonable good understanding of the company, meaning that we are never like completely off track. There is always something new to learn, and that is humbling, fascinating, and also enjoying. I personally loved how they emphasized, especially at the beginning, this idea of commoditization of cognition. Like I love that combo of words because that is something I think only now people are starting to have an intuition. Yes, LLMs are super cool, but do they actually deliver real value? Like, is that the real value? And if you look at it, the pricing are dropping. It becomes more and more costly to build like you build a model. It becomes costlier and costlier with NVIDIA raising prices. And what you have is just another model that competes with all the other models. But what you really want is maximize value in production. And it turns out that what seemed like a ramble from a mad guy last year, saying, oh, all the value will converge where you have the intersection between the LLM, your business value, and your business. That is actually becoming true. And Palantir is the only company after more than 1 year showing this with clients and in financial numbers. There is no better proof that Palantir works and its AI works than showing, look, we are creating black magic, almost, not almost, 30% growth while expanding the margin. We deploy our AI on our own. This works. Prove it.
You know, one of the interesting things about this journey over the past 4 years, Arnie, you've been talking about, we've been here for a long time, and now the numbers are finally starting to make sense. I said this in the morning, and it's the first time I ever thought about it, but the reason this community is special, like the Tesla community is special, and it's not similar to GameStop and AMC and some of these other stocks, is because the company is actually executing. It's hard for a community around a stock, around a company, but the stock being a big part of it, to maintain itself if the company doesn't execute. And in 2022, there were a lot of moments where I think people were wondering if this community would survive. It's kind of like a sports team, right? Like you could be a Knicks fan, but the Knicks haven't won a championship in 40 years. And it's not going to destroy the community, but eventually, like it's just tough for the community to keep going through losing seasons for your favorite sports team. Stocks are a bit different than sports, and you know there's a lot more nuances to it. But at the end of the day, if Palantir doesn't execute, we don't have a community. And I think the byproduct of the community is not just the gains that people have on the stock, but the friendships, the relationships, all of the different, you know, I've met people in person. Arnie literally from Italy came to my house. He was sitting with me here a couple months ago, right? Like these are lifelong memories. These are like really important moments. And it only is happening because of this company that is executing. And at the same time, we get to make a fuck ton of money along the way if we're right. So it's just an incredible journey. I can't be more thankful to Karp and Sham, Ryan, and David, the whole team, all the Palantir employees, Chad, Iliano, actually bringing this community together and getting the company to engage with all these retail investors. And Karp at the end said that, you know, retail investors are winning right now. It's not always going to be like this. The stock could pull back. We've been winning a lot. There are, you know, bad moments and good moments, but at the end of the day, retail got this right and Wall Street got it wrong. And it's really special because that doesn't happen all the time, but it's happening with Palantir, and that's very special. All right. That's it. Any final thoughts? Anybody?
Do you think we're going to see a sell-off in the next coming profit taking?
My gut reaction to that is I don't care, because now the dip, I don't know what price the dip is. We'll go through the numbers and we'll see if like 38 is 40 a dip now, 38, 37. But like now the company's executing. And now we know they're going to keep growing at 30%. There's no way they decline from 30%. There's no way. They're going to keep growing at 30%. And now it's just a question of when they get to 35 or 40, right?
Okay, guys.
And it becomes even more impressive. Because
Correct.
the year-over-year comparisons are tougher and tougher. So if you keep growing 30% on top of was 19% or something, I can't remember, but becomes better and better.
Guys, how these results, which are unbelievable, change your perspective on the stock?
I mean, it doesn't really change my perspective. Look, like, is the valuation still up there? Yeah, I agree with Matt. Like, valuation at 46, 47, if it gets to 50, it's still up there. But it's just one of those things. We've been saying it for a while now. I think it's time we believe it. Stocks can be expensive if they're generational investments. And Nvidia was expensive. Tesla was expensive. Couch has been in Tesla since 2018. It's not like Tesla was cheap in 2018, right? By conventional metrics, but it became
It's not cheap today either.
Not cheap today either. So if you're in, it's just, the sad thing is when people get in at $42, $43, expecting it to go to 50 and do a quick flip, because Palantir could have been down today. It's up right now. It could be down later. But if you getting in at 40 because you think it can go to 200 10 years from now or 5 years from now, whatever, then I think that trajectory is a lot easier to deal with. And if you don't actually need that money, like if you need to pay rent with the money, it gets a lot tougher if it goes down. If you don't need to pay rent and you can just not look at it, it becomes really easy to just buy it and be there for the long term.
You know, I need to get a little bit deeper into the numbers, but remember when we were saying, look, the stock is expensive because almost 80x free cash flow is in the range of expensive prices, but the analyst expectations are low, which means that if analyst expectations are going to increase, that multiple that seem high in reality is actually cheap, because you would have a denominator, so bigger revenues, bigger free cash flow estimates in the future, which is now happening, that shrink the multiple. So what seemed expensive could become like fair again.
This is actually such a good point, because the analysts are so bearish on Palantir that their expectations are so low, like this Brent guy, and then Palantir comes up and it has, you know, if the expectations were 719 million and we came in at 726, it wouldn't be that big of a beat. The expectations were 703. So like the fact that they're so bearish and Palantir keeps executing is actually a benefit to us, because we keep beating by a high margin on it.
Look, I've been torturing people on X in the last period a lot with, look, analyst expectations are low exactly for this reason. Like the reason why I didn't reduce the stock further was exactly this. It's like, yes, the multiples are expensive, but under bad assumptions, that changes completely. Like now, I don't think we go to the extreme like Nvidia that went like from very high multiples to 30. Yet analysts with these strong numbers have no choices of increasing the estimates. Like I don't believe it is possible that the 20% growth expected for 2025 by analysts can be still written in the reports after these numbers.
I agree.
What do you think the new baseline, like we settle like 28-30 for like the middle ground, like I don't want to be wrong, but I don't really get this company that the analysts have. What do you think the new level is going to be? I think they're going to like settle around 40 perhaps, like 40?
No, the analysts are still going to say 34 to 35.
No way.
Now it's 30. I think they will bring it to 35.
35?
Yeah, no way 40. No way.
There's no way they're going to 40. No way.
Too big.
But they've been ridiculed for so many quarters by Carp. Like how many times can you get dunked on and not be invited to these calls? Like this is the hottest stock in the S&P 500, and you're not allowed to enter because you're clueless. It's time to put up those 40s, baby.
It was kind of funny that we finally got an analyst express his anger on CNBC. I'm so happy they asked him that question, because we finally got to feel his like just anger for Carp. Not on a personal level, but probably he's just like annoyed that this is how they conduct business, but they conduct business in their way. And he has not acquiesced to their model. Dan has, Mariana has. Mariana asked a great question, right? Like she's understanding the defense moat to this business. The other guys just think about it through numbers, and that's it.
Look,
he secretly wished they missed. Secretly wished.
Look, this guy is a tech analyst. So if he explicitly says and accepts Palantir is the winner, automatically all his other companies that he follows are losers.
That's a good point.
And
Yeah,
Carp is quite explicit. Or you're a winner or you're a loser.
Yeah. I mean, it is just so special to see how Carp's doing it, and the analysts can't really catch on. One of the reasons I think retail has catched on is because, like, we just believe in that idea that you should give more than you take. And I think if I have to sum up Palantir, that would be my sentence: give more than you take. Like, they are giving way more than they're taking, and the byproduct is if you give more, people want to give you more. People want to pay you more if you help them. And so when Carp says we don't want to work with 10,000 customers, we want to work with, you know, the best of the best, they're going to pay them the best of the best in terms of top dollar to actually provide meaningful software. So it seems like that's not slowing down. I think the final thing for this story is that whatever happens to the stock is whatever, but the growth is not slowing down. This is not a deaccelerating growth story like it was 2 years ago. And so now the market's going to have to figure out how do they price this, but that's up to the market. It seems like the company's executing pretty damn well. All right, cool. That's it. Thank you, everybody, for being here. Everyone's YouTube and Twitter is in the description. Thank you all again for being here as a community. It means the absolute world, and we're going to keep building this community for the long term. And we've got a company that's executing, so it helps us continue to build this community and do what we need to do. And just so grateful for everyone taking time out of their day to be with us and listen to the call. Palantir Weekly will be back on Friday, 11 p.m. Eastern. We'll dissect the numbers even further. Everyone's Twitter and YouTube, I'm sure, will have videos and articles going up on their interpretation of the numbers. And this is one of those days where you sit back and get a nice meal. You know, get a nice meal. If you bought Palantir early, you deserve to eat a nice dinner tonight and just pat yourself on the back, and then we'll get back to work and keep analyzing it tomorrow as we go forward. All right, that's it. Thank you, everybody. We'll see you on the next one. Bye, everyone. Have a good one.
Bye-bye, everyone.
Yeah.
Bye.